advantage if that comes in, and that can work within the existing system. The second, I think there have been asks for reduction in your transaction taxes. I think security transaction tax and
this also LTCG and STCG
LTCG
also.
Rationalization of your LTCG and STCG to some extent. GST, though not really the realm of the budget, it's a way to look at. That's one. The second thing I think is in terms of under the new regime, you don't have any kind of exemptions given, but there is talk of maybe probably introducing your health tax, your health insurance premium under ATD, under your new regime also possibly, because the premiums have been going up and we were discussing that. So if you can't reduce premiums, then at least the tax exemption works. I think the second is for real estate sector where home ownership is there, at least for home loans that are been taken for own residence, where you're staying in your own house, at least for income tax, your interest payment deduction, which again is not there. Because these two
No, but that defeats the whole purpose of moving to the new regime.
No, I know,
the
but
point
it's
of the new
also
regime was
agreed.
do away with all these
Agreed.
deductions.
I agree with you because it does go against it. But I think even if not your home loan bit, but these two are strategic in the sense of maybe helping to stimulate demand a little more. You know, at least for some time.
Let's see if Professor's mic is fixed. Your mic is fixed. Can we go to him?
Yeah. So, the thing that the Finance Minister can do actually is one to announce that some things will not change in the next few years. So therefore, they give a kind of stability, certainty about the whole fiscal situation, whether it's the corporate rate or it's the income tax, etc., etc. So that's one that he can do. The second thing he can do is to, maybe I think it's time to shift to the new regime. You know,
push mandatorily.
Yeah, push the new regime and be done with it. And the third, which because of the weakness of the private investment, is to announce measures that will encourage the private sector to start investing
more. Ma'am, you know, I just showed that graphic. I don't know if we can play that again. This public expenditure, public capex expenditure of the Modi government has been breaking all kinds of records. 10 lakh crores was crossed first time in FY 2025. Last year was 11 lakh crores. I mean, while that's great, how long can the government alone be doing this heavy lifting?
You see, the increase in infrastructure spending has been a very important part of the recent budgets, and it's a big growth driver. The roads and the railways and the interventions in the ports, connecting the manufacturing clusters to EXIM gateways, interventions in the rural economy. And when there's so much of push for infrastructure, not only is it good for the investor sentiment and to improve the logistics cost, but it also has a lot of benefits. A growth momentum is unleashed in the economy for the steel industry, the cement, and all the other components which go into infrastructure. And look at real estate. Real estate is a growth driver today. And all
markets are flat. I mean, markets are open today, by the way. It's a Sunday, but because it's the union budget presentation today, the markets are open. Fairly flat, about 0.1%, I think, down the Sensex. But again, you can never tell with the markets. You could have the best budget, the markets could still be down. You could have the worst budget and the market still can be up. I think, but the big expectation from the market is on LTCG and STCG. I think this is something that they've been talking about for a while. Whether or not the finance minister has the elbow room to fix that, I don't know. Just in terms of, you know, her fiscal mobility, as it were. But aside of that, Professor Mehrotra also wanted to make a point about, you know, we've been talking about why is private sector not coming in? Why is gross fixed capital formation still not showing that change of trend over the last 4 or 5 years, certainly after COVID?
So let me begin by talking about the good news on the public capex. You're absolutely right, Zaka, that it has been very large and in absolute terms, in lakh crores, it does seem to be extremely large. However, you know, lakh crores is not a very good estimate to look at, because obviously the rupee is depreciating all the time, meaning the inflation is taking place. So all economists look at this as a proportion of GDP, you know that. And in the last 10 years, there's been, you know, significant capex, but it's always been in the region of 6 to 6.2% of GDP, which is what it used to be in the preceding 10-year period. The difference was precisely what you asked about, that the private sector used to kick in and it has not been kicking in. And that's very problematic, and it's very critical that, you know, everything is done to actually prevent the government from continuing to spend so much on infrastructure, because it is not being able to spend on all the good things for human capital, on health and education and nutrition that it could have, should have, and where the public expenditure has come down. So we should spend some time talking about private investment, why it's not rising.
Okay.
Yeah.
So I want to go back to that graphic again, if we can bring that up on our Stipe graphics as well. We've got the Sensex numbers. Let's go there. It's again flat, less than even 0.5%. Forget about 0.5%. 40 points down on the Sensex, and what is it? 30 points down on the Nifty. So there's not much to write home about there. But of course, we're still waiting for the speech to begin, which will happen in less than 2 hours' time. 11 a.m. is when the finance minister will rise to present the union budget for FY26. But like I said, 0.05% on the Sensex and 0.1% on the Nifty. So it's very flat. But like I said, the markets are still open because the budget is being presented today. I guess once the speech starts at 11 a.m., you will have a live tracker of how the markets are reacting. Right now, extremely flat. But I want to come back to the point that one of our guests was making about fixed capital formation as far as the private sector is concerned. We've seen public capex go massively in a big way, and it's been a feature of the Modi government over the last 10 years. But what about gross fixed capital formation? Now, 2011-12, that's more than 10 years ago, as a percentage of GDP, it was above 30. It should be in the 31-32 range is what we are told. 34% is what it was back in 2011-12. But in 22-23, it went under 30%. It's 29% is what we're given to understand. So what explains this sort of declining trend when it comes to gross fixed capital formation? It's an indication of private investments. And why is it that private players, we keep hearing about animal spirits. Okay, now the Sensex is going back up in green territory. It's slowly climbing up, 20 points up, 15 points up. But again, like I said, relatively flat, both the indices as of this morning. We're waiting, like I said, a little less than 2 hours for the budget speech to begin. But just on that point about gross fixed capital formation and how the rise in public capex is almost inversely proportional to the declining sentiment or the declining appetite, if you will, in private sector for further investment. So let me ask both our guests, all our guests about that as well. Let me start with Mr. Garg on that. We've been hearing about this phrase, animal spirits. Why aren't we seeing that in the kind that we were expecting, at least for the last 3 or 4 years?
I think first of all, we should understand the whole context. As you rightly mentioned, that's about 30% of the capital formation which is currently taking place in the Indian economy. It is less than 35-38% it used to be earlier, but 30% of our GDP is about 110 lakh crore. The government capex is 10 lakh crores.
Yeah.
So it's about 10% of the capex, which is the central government. So sometimes we get an impression that as if only the government is doing the capex and the private sector and the household sector is not doing. That's not correct.
Okay.
Right.
But it has been declining,
So
right?
it's proportionally,
Correct,
it is declining.
Proportionally, yeah.
And government capex is proportionally increasing. But that's a very low, from 6% to about 10% is where it has gone. So that's one. Now your question about why it is declining, there are two big reasons in my judgment. Number one, over the years, the great capital guzzling industries and infrastructure is reducing.
Okay.
And the share of the GDP from services and less capital consuming industries is increasing. So if you have 52% of this GDP coming from services, which requires much less kind of the capex will decline. Whereas the physical, earlier the road, rails, the manufacturing, factories that required large amount of capex. So that is not required. Second, since we're moving towards the industries of the future, let us say power sector. So the electricity production or the computers and all, they also require much less capital expenditure. To produce a solar energy or a wind energy is far less capital intensive
Than
then
traditional
the coal
fired
and the
plants.
petroleum.
Okay.
So don't worry about too much.
Okay.
There's only one element where I think there should be we should be watching is the real estate, because real estate is also a consumer of very large amount of capital.
Correct.
If that goes up, then it's good for economy. If that comes down, then that's
Then
bad.
it's good.
And in last 10 years, if
Yeah.
you've seen the real estate has sort of flipped down, flipped up, gone up, and again is declining these
Now,
days.
okay. Let me go across to two of our colleagues as well. Shweta Punj is joining us from Money Control. Sonal Butra is joining us from CNBC TV 18. Sonal, let me start with you first. Markets so far very flat. Looks like both the Sensex and the Nifty are, less than 0.1% down. What's your read on what's going on with the markets?
Very flat right now on the headline index, but if you go underneath, there's big carnage that we're seeing across major sectors. If I talk about sectoral movers, only two of them, that's pharma and auto, they are matching reasonably right now. Big cuts across the board. The mid cap and the small cap, they're down 7%. Metals, that has been one talking point for last couple of weeks, and there's a big crash across commodities. Be it copper, be it silver, gold. In fact, silver and gold, they were down 30% over the weekend, and that crash continues as well. And related stocks, the likes of MCX, your trades and commodities, you have the metals index, which is the top loser right now. So underneath, there has been a lot of fall that we are seeing across sectors. Of course, we are watching out for the budget, and since last budget.
All right, Sonal, thanks for that. That's a check-in on the markets from CNBC TV 18. Shweta Punj of Money Control is also joining us. Shweta, in terms of the elbow room that the finance minister has, last time she addressed the income tax question, then you had the rate rationalization of GST that happened in September. How much elbow room does she have for further relief for India's middle class? So you think the focus of this budget is going to be on something else? It's about the global uncertainties, the tariffs, what can importers and exporters get in terms of relief? What is going to be the focus of this year's budget?
Zaka, so we were discussing this earlier as well in the newsroom, that every budget cannot be a consumption-focused budget. There has been a lot that's been done to boost consumption. As you mentioned, we've seen income tax rate cuts, we've seen GST rationalization and so on. This budget will be, or has to be rather, about presenting a medium-term vision for India. We saw some of that in the economic survey as well, where the CA has, specifically mentioned the areas and sectors that India needs to build upon to build its manufacturing capabilities. He speaks about deploying economic statecraft to become indispensable to the world. So I think that's what we're going to see being taken forward in this budget. In fact, yesterday we reported on a story that the Part B of the budget would be very, very forward-looking and represent a vision for India. And I think that's exactly what everyone's really looking for. We are seeing markets that are looking very volatile at this point. That's because at the moment, considering the geopolitical uncertainty, what's really needed is a direction. We've been behind the curve where AI and innovation is concerned. So that could be another focus area in this budget. We could see a lot of work around custom duties. That's something that's been initiated with a lot of FTAs that have been signed, but that's happening in piecemeal measures at the moment.
Okay.
We should see a more consolidated push towards that.
I also want to go across to CNBC TV 18 Managing Editor Shireen Bhan. She's joining us from the CII studios. What's industry's expectation, Shireen, this time from the Finance Minister?
Well, Zaka, good morning. And it is a super Sunday here as we decode the budget for you. But I think industry is going in with measured expectations. The hope is that there should be continuity. There should be no negative surprises, that the reform agenda that's been set by the government were to continue. Capex, 14 lakh crore rupees, that's the capex number that industry is hoping for. That is certainly something that we're going to be watching out for, because remember, the heavy lifting has been done by the government when it comes to capex spending. Defense, watch out for that. Unequal vocal consensus that this is a post-Operation Sindoor budget, and hence defense sector allocation is going to go up significantly. Will it be 10, 15%, or even as high as 20%, or even 20% plus? That's the big question. But most people that we've spoken to are going with a 15 to 20% higher allocation as far as defense is concerned. more schemes to boost R&D investment, to incentivize R&D and innovation. We already had the RDIF fund announcement, so that is still being operationalized. I'm not sure whether we're going to see anything specific on that front, but I think the larger vision on AI, the AI infrastructure build-out, etc., is certainly going to be something that the finance minister may allude to in her speech, which probably is likely to be longer than usual because we're told that Part B is going to get special focus and special attention. Another aspect that we should look at, and this is my hunch, but if I look at the last two economic surveys, there has been a convergence between what the survey has prescribed or suggested or recommended and what the government has done in the budget. Now, the survey is talking about disinvestment, reviving disinvestment, in fact, going as far as to say that public sector companies should in fact look at bringing down the government holding to 26% while retaining control. Now, will there be a revival of the government's disinvestment program? It's been dead quite virtually for the last several years. That's my hunch. I don't know. They are faced with a tax shortfall. Non-tax revenue mobilization is going to be crucial. So that is going to be something to watch out for as well. And finally, I think India's impetus to be a part of global supply chains, India's impetus to draw in FDI and FII, there's a lot of chatter that the government may do something to draw in both foreign portfolio investors and FDI. Nilesh Shah, speaking to us just a short while ago, said he would like a Digi Yatra, frictionless entry for foreign investors as well as for domestic investors. So could we see some announcements on taxation as far as foreign flows are concerned? Given where the rupee is, we will have to wait to see. But that's kind of the mix that industry is going into Budget 2026 with.
All right, Shireen, Shweta and Sonal, thank you very much for joining us on our Budget Day coverage. As we get live pictures now from the Rashtrapati Bhavan, you can see Rashtrapati Draupadi Murmu walking out that main door, greeting the Finance Minister presenting the Bahi Khata to the President of India. Mr. Garg, I just want you to walk us through these pictures. As you say, this is a new practice of presenting the budget copy. You have the MOS Finance and the entire...
The Finance Minister is not handed over.
Okay.
She just showed and then took it.
Okay.
So it's not handing over the copy, it's taking the blessings.
But then there is also a sort of conversation that they have where she briefs her
Of
about
course,
what
now
is going
there
on.
would be a conversation. They would sit together for about 10-15 minutes. We'll have the conversation. Finance Minister will brief the President about it and re-seek the counsel and the blessings of the President.
I know we said this last time and the time before that as well, but the fact that the two protagonists in this picture both are women, I think that's a fantastic testimony to Nari Shakti and to the fact that
even Economic Affairs Secretary is a woman.
is also a woman. Yeah,
So the
I
budget
think
maker,
that is a great testimony to women's power, ma'am. I mean,
Yes. I do hope that in this budget we get more allocations for childcare, for creche, for working women hostels, because the Viksit Bharat goal is to take women participation in the labour force to 70%. So I do hope for that as well.
and that has been a concern as well. The labour participation force among women has been coming down.
It has been actually increasing, but not as much
Not
as
as
we
much
would
as- yeah.
want it to be.
I would suggest that women's participation should increase, but it should increase in more remunerative jobs.
Okay.
The largest increase is coming up in what we call unpaid helper in family enterprises. That is where women have overwhelmingly coming up in the job. The job increase in last couple of years is in that. Shouldn't be
There's
there.
also this practice again that's been started, Professor Rajiv Kumar, about mixing curd and sugar and offering that to the Finance Minister. I don't know if we have pictures of that this time around, but last year we did see the
By
President
the way, there is
offer
a full
sweet.
breakfast.
Oh,
which
there's a
is
full
also-
breakfast that happens at the Rashtrapati
And
Bhavan.
also dahi shakkar.
Dahi shakkar. That's
Yeah,
good.
well, that's a good omen. I mean,
Good
that's,
omen.
I feel that, given all the noise at the global level, it's a time for India, and the FM has a very big responsibility to have a very strong focus on the priorities for Viksit Bharat. And she needs all these blessings and the curd and the shakkar, I'm sure.
No, we did talk about, the global turmoil that is going on. Even this morning, Mr. Trump, I think, has posted on social media saying India has assured that it will buy Venezuelan oil. Again, it's I don't know who has told him this, but it's certainly having an impact back here in India. How does the Finance Minister sort of insulate to whatever extent she can,
I think
Indian industry from these
the
two global
first thing
shocks.
that I hope the Finance Minister will do will give her point of view of the global turmoil that is taking place at the moment. How does she understand that?
Yeah.
Is that a more fractional world, more protectionism,
Yeah.
etc., and so on. But and in that context, talk about the EU,
FTA.
India FTA, and say what, and maybe the budget should actually announce very specific measures of taking advantage of the India-EU FTA. So that is what is, for example, now if textile, garments and leather are going to have 0% duty on the EU, this is the time to now give some incentives to the manufacturers of these commodities to take full advantage. So I think India in the world economy should be, in some sense, at least a prominent theme of the budget, and not all inward looking.
So, the one thing that we've seen, every country has been affected by this tariffs and the tariff war that is going on. The only country that's managed to sort of at least save itself, or at least look America in the eye and negotiate on an even keel, seems to be China, because they have the capacities, they have the leverage, whether it is rare earths, whether it is manufacturing. What leverage can India hope to achieve, if not immediately, at least in the near future, where you're not browbeaten into accepting such lopsided deals? And India has been holding off from accepting this US FTA, the US interim FTA.
Well, it seems that the India-US trade deal is going to get delayed even more. And as far as leverage is concerned, we did have the leverage in respect of pharma and possibly services exports. But pharma, he had already let us off. There were no tariffs on that.
Yeah.
Services exports, I guess we didn't decide to use because it would have hurt us.
More than
Exactly. So in a sense, we don't have that much leverage, and that's certainly is clearly a fact. But can I just go back, Zaka, to the point that Rajiv was making, and very important one, because one leverage we could have or should have had if we had begun to diversify away from the US market. They are our biggest exporter in advance, and the EU deal does give us that opportunity. However, let's just remember that the EU is going to take over a year to ratify this, put it through their parliament and their national parliament.
European Council,
So for that reason, Rajiv's point becomes that much important, because we will have to increase our labor-intensive exports, which will get cut if we attempt to try and sell more to the US. And the EU could be a much bigger buyer. And if we put in place labor-intensive sector packages, it would be very helpful, because it will help these industries to prepare for next year. That's the point.
And I think, there's also the economic consideration, there's also the political consideration. For example, a place like Tirupur in Tamil Nadu, which is a huge textile manufacturing hub, that state goes to polls in a couple of months. You have even a place like Agra, Kanpur, that belt, which is a big leather manufacturing hub. That state goes to polls in about a year's time. So the finance minister will have to address some of these labor-intensive, small-scale industries who are export-oriented, export-dependent. I also want to get in Alpesh Jain and Arvind Srivatsan, both of them joining us via link. Alpesh, if we have the stock market picture right now, I think last I checked about 5 minutes ago, it was flat, relatively flat. What are the market's expectations from the finance minister? I know we've talked about long-term and short-term capital gains tax has been a long-standing demand, but does she have the elbow room to make that rationalization there?
Hi, good morning. I will talk in specific related to FI, what we are missing in the entire discussion. We would have seen almost 10 lakh crores worth of shares have been sold off by FIs. FIs hold roughly 17% of the markets. This is where we are missing. So everything about STT, LTCG, STCG, all has to benefit specifically when it comes to FI in picture. Because what is happening is 10 lakh crores sold, still markets are stable. The only reason here is the SIP book size which is helping us. 32 crores, if I'm not mistaken, is the SIP book size which is helping us markets to be stable. When it comes on a global front, we are the least performing markets for this year. In the entire global pack, we are the least performing. So this year, all investors eye on how this how this budget shapes. So let's see how it works. LTCG, STC, especially STT has to be removed, which is a double taxation for a FI, taking dividend taxation. So
okay, Alpesh, give me a moment. I want to go across to CII, where Shivani, my colleague, is joined by Mr. Pirus Kumbata, Chairman of the CII Task Force on Affirmative Action. Shivani?
Yes, Pirus Kambata Zaka is joining us. He's Group Chairman of Rasna Group as well. Mr. Kambata, thanks a lot for joining us pre-budget today. It's a Sunday budget, and as we were discussing, it's not just rare, but possibly has never happened before. But I want to touch first on the whole atmosphere of FTAs, trade deals getting done. You look at food processing very closely. Is there a good sense of buoyancy in the Indian industry because of these FTAs, and particularly in food processing?
100%. I think our Prime Minister talked of reform, perform and transform. And it applies to industry also. And I think he has given us, when I say he means his leadership, we have not signed one FTA, but so many FTAs. Australia, New Zealand, UK, UAE, Oman, the list is going. Now it's for us to take the opportunity. And I'll tell you why food processing is going to be benefit. Because processed food products, when they get exported, the value benefit comes directly to the farmer. And what the government has done is they have said, no, we will not cover part of the but processed food we are covering. And I have been in this propaganda that Indian companies, should not concentrate on pickle pappad for Indians. A lot of people tell me, you export to Indians. I say, no, I don't. I export to the global markets. We can make let us say, the pastas of the world, and we can make the pizza sauces of the world. We can make everything.
All right, Mr. Kumbata, they're talking about rising exports. Well, despite all of this tariff trouble, the exports for the last financial year topped $800 billion, $825 billion. So, Nirmala Sitharaman, the point is, while yes, there is this global uncertainty, the tariff wars, etc. happening, India is also diversifying. I mean, India is diversifying through the Middle East, through Europe with the FTA. I think there are 9 FTAs that have been signed so far, including the Europe one last week. So is that the way to go?
No, it has to be the way to go. We need to diversify. The conversation about stepping up regional trade has been a very long-standing one. This gives us the opportunity to focus on that. And I think the FTAs certainly help. A trade deal with the US will have to happen at some point or the other. That's inevitable. But I think, it's pretty much like how manufacturing went the China +1 route at one point. India will have to diversify where we're looking at. And I think somewhere the focus on e-commerce exports has also helped to a large extent. So, with the kind of reforms that RBI has brought in for through their EDPMS and things like that, I think that has also helped. And that's an area one can focus on, especially with changes being made to courier regulations and your entire logistics sector. So we can continue to look at that. But I think US +1 or US plus more than one, obviously, many more will be the way to go, at least in the foreseeable future.
I put this up on social media the other day. After COVID, China realized the world realized that the world has to move towards China +1. And I think in the last year, the world has realized we have to move to an America -1 strategy as well. So it's China +1, America -1. But one thing that has been a critical focus, this has been a political thing as well, that the government has had to take flak for over the last, certainly over the last 4 or 5 years, is jobs, the rate of growth of jobs, the quality of jobs. So can we bring the jobs picture? And the government has been stressing that, look, there's been a lot of formalization of the economy. So let's look at the EPFO figures, the number of subscribers that have been added over the last 4 or 5 financial years. And the government's contention is that there is a lot more formalization of the economy that's going on. The political opposition doesn't see it. The opposition says unemployment is going up, particularly when it comes to youth unemployment. I think the last CMIE figure was 17.5%. But here you go. The jobs outlook, 2017-18, pre-COVID, it was 47.5 crores employment, formal employment, 2018. COVID, there was a dip, but now, 5-7 years later, 23-24, we're looking at an additional almost 20 crore people who've been added to the formal workforce. So the figures there, this is from the Ministry of Labour and Employment, 64.3 crores. That's the formal labor in this country, the formal organized workforce in this country. Self-employment, that's also gone up by about 5 or 6%. It was 50%, 52% in 2017-18. It's gone up to 58% in 23-24. Similarly, I mean, there was a conversation also about bringing self-employed folks like CAs and doctors into the tax bracket. But let's move on to the other sort of breakup when it comes to labor. Unemployment rate, this is official Government of India data. Unemployment rate pre-COVID was 6%. In 23-24, it's been halved, almost halved to 3.2%. So this is what the data is showing, at least this is what government given data is. Youth unemployment before COVID, 17.8%. Post-COVID now in 23-24, 10.2%. So the question then is, why is this, and let me start with Ms. Davra on this because you've dealt with this very closely in the past. Why is this not, why are we not able to feel this? That if overall employment, formal employment is going up substantially, why is there still a thing about, jobs, quality of jobs? We had this whole debate around gig workers recently. Why is that the case?
See, when we talk about youth, the age bracket is lower, right? So overall unemployment comes down to around 3%. But when you look at youth, you get a little higher figure because a lot of the young people are in education, higher education, they are in skilling, or they may be doing household chores. And I think it's important to look at NEET rate, which is the youth who are not in employment, not in education, and not in training. So when we look at that rate, it gives us a more meaningful figure. And
just give me one moment, ma'am. There's the live pictures that are coming in. Just want to point our viewers' attention to that. So the finance minister and her team have left the Rashtrapati Bhavan. They're just pulling in to the Parliament complex. And again, at the Makar Dwar of the new Parliament complex, you will again see the minister, her team sort of turn around and present a photo opportunity to the photographers there. And then, of course, she will enter the Parliament building. There will be a cabinet meeting presided over by the Prime Minister. They will affirm. They will give their assent. The cabinet gives its assent and passes the union budget for 26-27. And then, of course, at 11 a.m. In the lower house in the Lok Sabha, she will rise to read the budget speech. But yes, please go on. You were making the point about the quality of employment.
Yes. So I think it's very important to make interventions there. The new education policy has come out, which integrates vocational education in a big way in the schools. So that should bring some improvement. Plus the many skilling programs which have been brought in by government, the Prime Minister Kaushal Vikas Yojana, the Deen Dayal Upadhyay Yojana, the qualification packs in skilling, but it's very important to bring industry now into skilling, into trainings. Plus the ELI scheme, the employment linked incentive should have a good impact, and it is linked to the manufacturing sector for a longer term of the ELI. But in all this, I see the economy rising with a new strategy to a higher growth trajectory, which is going to bring more jobs, more quality jobs, more formalization of the economy. And I think the reforms we've seen in the last financial year are preparing us to go to a higher growth trajectory. The labor codes have come in.
So the finance minister there at the footsteps of the Makar Dwar in Parliament, of course, the red Bahi Khata that we keep talking about, which of course is a change that this finance minister has brought about. It used to be this brown leather briefcase before, but now it's the Bahi Khata sort of taking off on Indian tradition. You'll see. You want to spend a minute on this new tradition of the Bahi Khata. I think it's been for the last 4 or 5 years since post-COVID. I think after COVID.
Once she decided to move to the iPad kind of thing to read it from there instead of a written speech.
Correct.
The convention changed from the briefcase to the Bahi Khata, what you call. So that's fine. I think this, but inside what it is the same.
Okay.
The budget speech.
No, but this time I believe the part B of the speech, which deals with direct taxes and so on, will be much longer than the part A. That's what we're given to understand.
We will come to know part B.
That's what we've been told. Yeah.
I hope not.
Okay.
No. I think this is very important. See, the part A is essentially expenditures.
Correct.
That to use a phrase which the government has been using, Gyan, the Garib, youth, Annadata and Nari, which covers 97% of the people. That is what the expenditure addresses. The part B, which is the tax, addresses basically the 2 crore taxpayers and 1.5 crore GST taxpayers.
Okay.
So part B, if it is longer, you are addressing to a rich and the upper middle class
Okay.
rather
Let me also go across quickly back to Shivani at CII with Mr. Pirus Kambata. Yeah, Shivani.
Yes, thanks a lot for that, Zaka. Quick comments, as we stay with those live pictures, the FM reaching Parliament. Mr. Kambata, you were talking about, the expectations, particularly for the industry, the food processing industry, because of the many FTAs that have been signed. How important do you think these FTAs will be for the Indian industry?
Very important, for food processing in particular. Because see, when we process food, India hardly processes 2%, 3% because we consume fresh. But the world consumes processed. So imagine we can process now for the world, and what wisely has been done in all FTAs is that the processed food has been included. Fresh is out. So that means we should not just concentrate making papad and pickle, but we can stop making the pastas and the tomato sauces for the world, and that's a huge opportunity for food processing, and we should thank the government for that.
We've been talking about this for several years, boosting private investment as far as business or the economy is concerned. It's still been kind of underwhelming. What's holding the private investment?
One thing, for me, ease of doing business is important, but the underlying thing is the trust. There is honestly a trust deficit. Industry, when they are told you file 100 forms, you give this declaration, you give this bank guarantee, you give this attestation, then we feel, oh my God, what is happening? And from the government side also there is a trust deficit, industry side also there is a trust deficit. So I think that has to go. We have to partner in Vikshit Bharat. If we have to develop India, it is the industry and the government, we have to do it together. And if this comes about, let the government also say, okay, fine, have self-declarations, go ahead, we'll have one license. And I think slowly it is happening. For example, you see the labor codes. And I think that is the step in the right direction. Labor code has something what I'm trying to say. Second thing in my mind, we need tax certainty. I don't think any businessman, he wants his entrepreneurial skills to be used for his product, not for sitting with a lawyer and discussing cases 20 years old. And many times these cases are 20 years old. So like, the cases go on. So certainty, ease of paying tax, ease of litigation, amnesty schemes, tax resolutions, make a taxpayer's life easy and let him concentrate on his business. If this happens, I think it will bring in more investment not only from Indians, but even foreign players. That foreign investors actually are very wary about the Indian system. If you ask me anyway. And I think I want to take care, so call out that first.
No, we were discussing exactly that in our studios as well, the FIIs and the FDIs, etc. Final quick question, your biggest expectation from today's budget announcement and speech?
My biggest expectation from today's budget is that the government's agenda is reform, perform, transform. And I think we are going to see the reform agenda in full flow. Because the GST rationalization has shown that if you reform, you get more growth. Honestly, that's what the GST has shown. So I think I expect that to be now done much more, what I call it, a bigger way.
Well, certainly that's what the expectation is. Reforms reloaded is what we are calling it as well. Pirus Kambata, thanks a lot for joining us and giving us your brief sentiment ahead of that budget speech. Zaka, back to you in the studio.
All right, thank you very much, Shivani, and to Mr. Kambata. We're just showing this in our ticker as well. So metals have been falling in a big way. In fact, the multi-commodity exchange, gold and silver, is seeing its biggest single-day fall in 6 years. Gold ETFs have crashed up to 16%. So the precious metal gold has now gone down to 9,000 rupees for 10 grams, and silver has fallen down to 17,000 rupees per kilogram. Why is that, Professor? Is this just correction, or is it?
One, it is a correction. And two, I think the commodities people are sort of now factoring in this is a post-Trump tantrum era now.
Okay.
The Trump tantrums are over, and therefore there will be a greater stability, greater certainty, going forward, whether it's in exchange rates or in the world trade and thing.
So falling commodities is also good in the sense that the people are predicting, stability and less volatility, more stability when it comes to
rise when there is abundant uncertainty in the global market, and and this is seen as the safe hedge.
Yeah.
Now that's changing.
Okay.
And that's changing, I think, because the Venezuelan situation is coming. All right.
Yeah.
And the Greenland thing is now sort of
subsided
gone off the burner. So therefore, and there is a correction. 17% increase in January on gold prices has been enormous. So there is no harm there. Yeah.
So Nirmala, the point being that for a country like India, this is good news, because obviously the question also rises, where is this money then going? Is it going to come back to emerging markets? Is it going to go back to the developed markets? Will it go from commodities back to equity? Where will it go? some of this money if people are taking profits out, as Mr. Rajiv Kumar was saying?
I think there are two things here. I think the correction was long overdue. If you look at it, it was actually quite high. So money, will it go back? I think lots of profit booking has happened, which means that I don't think it will go anywhere. It may go into consumption also for a little while. I think that's a big thing because you've seen the large profits that silver and gold have generated. Plus, I think there is also some kind of conversation that's been happening on hopefully reduction in your import duty on gold, though I don't see that happening, but maybe all of that is...
No, but where I was getting at was, do you see some of that money go back into the equities? I mean, the returns on the Sensex in the last year have been in single digits, I believe. Or maybe even in negative territory if you ask. We'll also go across to Mr. Arvind Srivatsan on that. But just a quick word on...
No, I think you will see value slowly coming back in. I mean, budget day today, it's also been what the global cues have been, which is what we were discussing. The global cues haven't been very, very favorable.
Yeah.
And I think over the next month or so, you will see a little more stability, money slowly moving back.
Mr. Srivatsan, why are these commodity prices falling, particularly gold and silver? Profit booking, correction, and two, more importantly, what does it mean for an emerging market like India, as we see pictures of the Home Minister, Mr. Amit Shah, arriving in Parliament? Yes, Mr. Srivatsan.
Yeah, so I think it's a bit of everything that you mentioned. Clearly, profit booking has been happening over a week or so. People are taking money off the table, and I guess some portion of that can come to the market. Again, it depends on what we hear today. Certainly, I think it'll be nice if this gets back into the domestic economy. So I think correction was overdue and it was overheated. So I think it's fair that we are where we are. So it was always expected.
Well, what about on there have been net outflows of both FDI and FII in the last few months. What needs to be done to correct that? Or do you reckon that's just simply because of this AI boom that's being talked about in the US, and a lot of money has been going after AI. Now things are stable. You see some of that money coming back into emerging markets like India?
Yeah, so I think FPIs, they really don't have a law. I mean, they have a short-term sentiment. So if you really see 25, they took money out of India, invested in Taiwan and Korea and South Korea, and they got, they got double-digit returns. So I think that was the sentiment. I think what's required to really get portfolio investors and even FDI back into India, I think the ease of doing business. If you really ask me, we've dropped the tax rates. We've created a faceless administration system. We'll hopefully see reforms on customs. I think ease of doing business, if you can acknowledge and really work on it, reduce the multiple interfaces, compliances, and if you can have some committee that really accelerates ease of doing business, I think it will certainly help get patient capital. If you just to also go back a little, the government actually amended the insurance laws to permit 100% FDI insurance. Under a unified license, you could do general and life. But the fact is, despite this, capital is yet to get into India. So I guess one is the rupee factor, but I think more is they would like to wait and see. And hear from the budget and pause and see how the geopolitics reset. But I think that's where we are, if you really ask me.
Professor Rajiv Kumar, I mean, we've been talking about ease of doing business, certainly in the last 10 years since Prime Minister Modi came to power. If after 10 years, Mr. Srivatsan saying that's an issue that needs to be addressed, then what is the...
That's the issue which needs to be addressed.
Okay.
And if we want to give an answer to why private investors are shying away still, it is this, which is that on the ground there are lots and lots of pricking points, there are lots of sort of stumbling blocks, etc. for this.
Like what? I mean, labor codes have now been
labor codes have been
simplified,
but not notified, so we don't know what's going to happen.
They've been
The GST
to be operational.
notified, but the rules have
they're
not
in operation yet.
Not
Okay.
operational. I give you one.
GST
example.
has been rationalized.
No, GST has not been rationalized. In fact, for a large number of commodities, the GST on intermediates is higher than the GST on the final products, as a result of which GST credit is collected and the refund is done only once in three months.
Okay.
And therefore there is a cash flow block. Now the GST on capital goods, on capital machinery is now not going to be credited, but they are saying that you add it to your cost and
No,
depreciate
but the whole point of this reform, this indirect tax reform, was to reduce compliance. One of the aims was also
just this figure that GST rose by 6% in January.
Yeah.
It shows that the tax buoyancy is less than 1 because the GDP is rising by more than 6%, and that's not a favorable thing to happen. So GST rationalization, GST simplification is really required, and then the whole refund mechanism that is there. So that's one part of it. The second part of it is, the sort of work being done by the agencies, the so-called agencies, and there is almost free for all for them at the ground level, and there is no rule, there is no curbing anything of this kind, and therefore there is really uncertainty about what a person can expect, when they do A, B or C, and that's this budget, if it can clarify that if you are going to do this, this is what you will achieve, and nothing else. So arbitrariness has to be reduced.
Can that? I mean, the compliance costs, whether it is GST, further rationalization of the process, not so much the rates, but the process. Can that be addressed? I mean, the GST is out of the ambit of the budget, but when someone like Mr. Srivatsan says address ease of doing business, why has that still not been addressed?
It's been addressed, and the Jan Vishwas Bill 2.0 has come in, but it has yet to be passed. There are a couple of things here. There's the compliance burden, which has to be reduced further. There's the deregulation aspect, and there's the decriminalization aspect. And in this budget, we can look forward to the customs being made more rational, streamlined, the inverted duty structure being, addressed. Similarly, in the GST and the Direct Tax Acts, if we can see reduction in the compliance burden and a mandate for the national single window system for all ministries and all states, I think that could address a number of things.
It's a good time to welcome Rahul Shivshankar into the conversation. Markets are flat, commodities are falling. What are your expectations from Budget 2026?
Well, first of all, thanks, Zach. We're doing a relay race here today. So Zach will be back very, very shortly, viewers. We're also, of course, building up in the next 1 hour to the FM's much-awaited speech. It's going to be another one of those records that she has set as one of the longest-standing FMs in India's history. But welcome to Budget Day Studio, presented by DBS, viewers, as we take you through the big day.
And DBS Bank Budget Day Studio.
Great Sunday morning, viewers, and a buoyant start. Record GST collections coming in. That's going to give Nirmala Sitharaman some additional elbow room, really, to flex a little bit, to spend a little bit, and perhaps also, of course, at some level or the other, viewers, to ensure that India's growth story remains extremely robust. That's the fundamental issue here. We have underlying problems. I'm not going to gloss over them. There is optimism. There's reason to be optimistic, but we can't gloss over some of the problems. We look at them. We've got the best panelists in the business, the best analysts here. You don't need to go anywhere else to get even Insta analysis for the budget. As the FM speaks, our experts will be giving you their take on what you can make of this budget. But let's get some details into this conversation, because what we're really looking at, and we're being told, viewers, there are going to be massive policy decisions, and they're going to be packed into the part B of the budget. And let's shoot some of those graphics out here that set the context for this conversation. Remember, viewers, GST collections up, gold and silver taking a bit of a beating, as you know. And that's happening for a variety of reasons, and we're going to get into those reasons. One of them, of course, overheating. Silver is also used in industry in a big way. So is it possible that certain analysts believe that global business is not going to be robust as we go ahead? Are those the cues? Remember, it's an industrial metal. Also, of course, there you can see these are some big numbers. Exports really not looking so great, and that's really the big problem. This is the impact of the tariff. This is the impact of the tariff, and this is really where the problem begins. We need to ensure that we can pull up. I'm going to go behind this big screen here. There it is. We're going to go behind right there. There we are. There we are. And we are going to go straight there into that hot seat, so to speak. But fundamentally, we have a lot to talk about. Good morning. I want to begin with you first, ma'am. Fundamentally, we have an issue where we need to project to the world that India is the place to come and invest. Investment is not coming in. The numbers, as I've shown you, are looking good. The GDP numbers are up there. They look good. What's the mismatch? What's happening, and what does Nirmala Sitharaman need to do to attract business into India?
Right. The foreign portfolio investment is volatile, and the foreign direct investment, we've had about $81 billion in the last year. So that's quite sizable, but it's offset by the capital outflows. Now, my favorite topic for this budget is the FDI, attracting FDI into India, more FDI into India. And for that, there'll be a lot of expectation that the Honorable Finance Minister will look at strengthening the manufacturing ecosystem, whether that is by way of institutional reforms or structural reforms, more allocations to the industrial parks, the amenities, utilities for plug and play, water supply, quality electricity, and so on and so forth. And also, how do we attract the MNCs? How do we target them and enable them to bring their supply chains into India? So I think there's a lot of focus there which would help us, and look forward to a big announcement on customs today, rationalization of the customs duties, also simplification of the GST systems, more digitization in the economy for ease of doing business, single window clearances, deemed approvals, and so on and so forth.
Well, this is one aspect, deregulation, Mr. Rajiv Kumar. Deregulation, can't stress that. Why is it taking so much time? This is a conversation that has been going on for years altogether.
Rahul, it's taking so much time because it's not just the central government's job. A lot of it, maybe the majority of it today, is in the state government, and the responsibility of the state governments. And these state governments behave the way they would, which is why I had suggested at one point that this is now the time maybe to revive the inter-state council and bring all the states together, or create a council on deregulation and list all of these numbers, list all of these provisions, and say as to what is the timeline in which you will remove them. So that's one. The second thing is that with all due respect to Subhash, the bureaucracy doesn't want to get diverse itself of the controls that it has over the investor or the business. So and not at the higher level, at the lower levels, which is where they come, which is where they create issues for rent seeking. And that's because it's in the interest of this lower bureaucracy to have this regulation as much as they can. So I think those are the two reasons for which deregulation is not taken off as yet.
Okay.
If I could very quickly add, the labor codes actually...
The bureaucrat in her is taking offense.
Right.
I hope not.
But yes.
Very open to listening.
Yeah.
See, the labor codes, I think, show a path ahead, and when we see them operationalized, we'll see compounding of offences, and a lot of decriminalization has taken place. Compliance has been made simpler. So that takes care of a lot of things, but yes, we need more speed.
So what are we expecting?
For example, the standard operating codes, like whatever the BIS thing, when you import some intermediate goods, the inspector has to go to the factory from where you are importing and clarify that and certify that you can import it from there, and then it takes a year after her certification for then this to be notified. Now, how do you get the investment working on that on those lines?
Let me just very quickly, viewers, give you what we think are going to be some expectations. And I want to bring in Suhail Seth also. Let's put them out. Come on, let's fire them. Let's not waste time. Let's bring in Nalin onto the panel also. Nalin, please join us and grace us with the big breaking news that you're picking up from your money control system. I know that there's a lot happening and you need to share that with us. On your screens, viewers, deepening foreign direct investment, the impact of that. But here we have some important, the budget wish list, incentives for innovation, R&D, very, very important. R&D remains a very, very critically low, underperforming or underfunded sector of our economy. And when you want to make in India when you have to compete, when you're signing all these big trade deals, you need to have manufacturing up there, you need to be cutting edge, you need to have enough in the bank to innovate so that you are competitive globally. Support for AI-led incentives. Also, of course, duty cuts on EVs and related components. Will this happen? Will this not happen? We're going to have this big conversation. What's in it for us? You and I, the Aam Aadmi viewers, we're expecting a few things. We're expecting a higher disposable income boost, consumption savings, perhaps for married couples. Will that actually happen? Big talk around this, which will really, really help a large number of households. Let me tell you, scrap or cut securities transaction tax. That's the big one. That's the big budget wish list from a tax point of view. Reverse STT hike on futures and options. Let's bring up that also. Arindam, let's bring up that other graphics. The big one, the tax break angle, the expectations on that front. Let's pull out those graphics and put them out. Rationalize LTCG on equities. Something else that is required. Nalin, what's the big breaking news that you're picking up right now?
So Rahul, the markets are in the green this morning. The Sensex is up by 0.1%, the Nifty 50 by 0.04%. The markets opened on a weak queue, largely because the global sentiment has been weak. The metals have been collapsing. Gold and silver have been significantly down, largely because with the changes in the Fed, there is an expectation that about interest rates with the dollar. About a lot of people are buying metals to hedge against the dollar, right? Yeah. So if the Fed changes its positioning, so that's why the metals have been going down. So at the moment, what we are hearing from markets people who are on a money control broadcast and various analysts in the markets, the expectation from the markets is not too high from the budget, which actually is a good thing. Because if you go into a budget with virtually no expectations, then unless there's some catastrophe, anything it is likely to be positive, right? So that's why I think. But at the moment, the market expectation is not very high.
Market expectation not very high. Why is that?
Largely because of the global environment. FIs have been. This is now we are also the lead up to this budget, right? This is the weakest January in many years on the markets. FIs have been leaving the markets for a while, and because on Friday the global markets closed on a low. If you look at the Dow Jones and the New York Stock Exchange, they were down. So that's why India and also the weak currency. So all of that is affecting. It's not just the budget in isolation, right? So.
Okay, Santosh Mehrotra, how do we get the sentiment going? You've got some ideas, you've got some thoughts. Do you think the FM is going to walk you halfway there? Reforms is what the market is looking for. Are we going to go deeper in? What else do we need to do?
Well, budgets are rarely about reforms, as you know. You know, I think we seem in our country to be very fixated on budgets. Nowhere else in the world is the budget seen to be such an important document. Yeah. Budgets are inevitably about taxation, expenditure, and the borrowing that the government is going to undertake. So that's where we should be focused on. So what I'm hopefully looking for on we've had already a lot of action on the, forgive me, on the taxation side, both corporate as well as GST as well as personal income tax. So what we are looking for now is, as I think you were suggesting, private investment to rise. And for that to happen, the government will need to put in a much greater focus on its expenditure for packages for labor-intensive manufacturing. And labor-intensive manufacturing is largely carried out by the MSMEs, and they are the ones who will create the jobs. If the process of job creation through the MSMEs is put in place, Rahul, we will begin to see an increase in aggregate demand over a period of time, as a result of which down the road we will see greater private corporate investment.
So you're looking at that very closely in the budget. Nalin, you were raising your hand.
I was saying that I expect a huge focus on AI in the budget. With the AI Impact Summit is just a few weeks away. We are expecting announcements around investments in AI and deep tech. There was already a hint of this when the government was preparing the India AI Mission 2.0. I think
there is a fear globally also that AI is overhyped. Is that a fact?
No, absolutely. I mean, there are. In fact, that's been the big speculation around the US stock market as well, right? There's a lot of over-indexing on the AI stocks. I think what we are expecting is a move away from this on sector-specific AI models, and the idea that you focus on applications as opposed to LLMs. I think that's what that's what I think the drift of the conversation at the moment is.
Okay, give India a tax break. Do we expect tax breaks, Mr. Garg, from this particular budget? Are we expecting any tax breaks? Do you think this is really going to happen? We're going to have a few graphics pointers here. We're also going to put out types of our GDP and the earliest types that we've been putting out so that we have a good interplay. We can refer to certain numbers. The Sensex picking up there. So there's buoyancy. Generally, even some amount of expectation, the sentiment is positive, and that Nirmala Sitharaman will be gladdened by. Sunday, of course, for the first time in history, we're presenting a budget on a Sunday. Yes.
There are expectations or people look for in the budget on the direct tax side, both on income tax as the corporate tax, and also on the indirect tax side, since GST is not part of the budget, it's on customs and excise. So let me, on the direct taxes side, I think both the corporate taxes as well as the individual income tax have been taken care, have been given good concessions, the rates have been rationalized, liberalized in the past budgets. So I wouldn't expect anything more in the sense of giving concessions, but there is one major agenda left there. And that agenda is that there are two regimes still. The old regime is very low, it has not been changed for 11 years. There has been very low exemption and very high rate of taxation on that. But there are exemptions there. The new regime is very balanced, very fairly taxed, in fact over concessional to some extent. I think it's time now to merge both of them, have only the new tax regime, and build some of the good incentives into this and abolish the old tax regime. I think that is one thing which should be. We can also look at a customs package because we have very high incidence of duties, and that is required to be rationalized. We are doing it in many FTAs now. Right. So let us make it a major package on the
so there's a straight suggestion coming in for the finance minister, and we're getting into that business end now, viewers. You're seeing pictures coming on your screens from that cabinet meeting. That's where the budget contours will be discussed and shared amongst ministers, and of course there you can see the finance minister talking to Draupadi Murmu, who is India's president, and giving her a brief really of the broad contours of the budget. So obviously that we would love to be a fly on the wall there, but I'm just telling PCR and the director Saab to fire some of the Skype graphics that we have, that we might have even put out earlier, so that we can give you an overview of the macro picture of the economy. So let's do that. I also want to welcome Suhail Seth. Suhail Seth, if you're there with us, your big expectations. Your big expectations from this particular budget. What do you expect the finance minister to be doing? There's a bit of elbow room. We are doing well macroeconomically. Some problems at the micro level, but what's your big one?
Prime Minister Modi took over. The first thing he said, the business of government is not to be in business. If the finance minister stays off business, it will help India.
Right.
Number one. Number two, Rajiv Kumar, who was also a quasi-bureaucrat in running Niti Aayog, I love his confidence in taking on Mr. Garg and blaming the bureaucracy. The point here, Rahul, is we have created a bureaucracy which has a problem for every solution. We need to get rid of that. Having said that, I think the bureaucracy has also steered India with great confidence and with, a lot of value. I have four things to say. Number one, the job situation is dire. You may not believe it, it is dire. Start talking to people, start traveling around the country, and you will see how dire the job situation is. Santosh is absolutely right. If you do not encourage MSME, you are killing the entire job potential of India. Number two, AI, whether you like it or not, is here to stay. But it's just like what happened with Y2K. We all went nuts saying, oh, Y2K, end of the world. It's not going to happen. Number three, the ease of business is miserable. Miserable. They will never tell you that because we are a great country for rah-rah, everything's good. Ease of business is very problematic. Number four, If you're rich and you can steal, you will get a bank loan. If you're poor or not as rich and you want to start a business, you don't get one. I think our banking regulations or the way we provide funding for mid-cap or lower-cap businesses is critical. Look, Rahul, the problem is as simple. You know, GDP, we've got 6.7, 7%, blah, blah, blah. You have to look at two things. One is, how long will Rajiv Kumar and, you know, the two ladies and Santosh and Mr. Garg, how long will we subsidize India and Indians? This whole freebie nonsense has to stop, because that money is not Mr. Modi's or Mrs. Sitharaman's. It's your and my money as taxpayers, which is going to, it's creating an army of lazy Indians who don't want to do anything because they're getting all these sops. Number two, we have to incentivize industry.
Yeah.
I will tell you this because I advise some of the biggest companies here. A lot of companies feel that their investments outside India may well be profitable. Look, Trump is a hiccup. He hopefully will vanish after he finishes his term, if not before.
Yeah.
But the point is that we can't always be dependent on, oh, the tariffs have increased, what do we do? Look at what Modi did during COVID. We were able to manage our economy on our own. There was a certain self-resilience.
Okay.
And I need to build that.
Let me open that. Let me get those thoughts in. Stay with me. I just also want to bring in Anuj, who is my colleague from CNBC, managing editor, Anuj Singhal, CNBC Awaz. Anuj, I just want to talk a little bit about the gold and silver crash that has taken place this morning. What do you put this down to?
Rahul, good morning. Look, that simply can be put down to unwinding of positions. Silver prices had gone one way from $40 to about $120. The ETFs had taken unnecessarily large leverages both in US and in India, and at some point something had to give. The trigger was the US President Donald Trump announcing Kevin Walsh as his nominee for Fed chairman, and Kevin Walsh's policies are against asset price inflation, and that was the reason that you saw this kind of collapse. But you know, when you pump something beyond a point, when some asset class is in a kind of a parabolic move, all it needs is, it's like, you know, it's a bubble which is waiting to be pricked, and you just needed a trigger, and that trigger came.
So are you saying it's only a course correction? Because some people are saying the US dollar has strengthened sharply, while US bond yields remain elevated on expectations that perhaps interest rates will now hold and stay higher for longer.
You know, Rahul, this might be above my pay scale, because, you know, anyone who can answer this question correctly over the next 1 year is going to be multi-millionaire. Whether this is actually a top in gold and silver, or this is just a fall in a parabolic market, like you saw in the case of Bitcoin. You know, you never know. An asset class which goes up 10 times, in between will have 30-40% corrections. Now, if this is one of those big parabolic moves in gold and silver, which is going to take gold and silver much higher, and keep in mind, this is actually right now a big global battle between US and China, and China is not going to let it go easily. So this is about de-dollarization over the next 3 years. Donald Trump is going to be in office for next 3 years. There's going to be a bit of a China versus US playing out. Who wins? You know, I think that's going to be a multi-trillion dollar question. But right now,
I'm going to ask you a simple one.
It would be too early to call it the.
Yeah. I'm going to ask you deceptively.
I'll not stick my neck out.
Oh, there you go. I'm going to ask you a deceptively simple question.
I'll not stick my neck out.
Let me just put it this way. Is it the right time to buy? Is it the right time to buy? Buy gold. Buy gold.
Look, you're asking
silver.
A gold bull. You know, I've always been a gold bull. I have been buying gold for last 4 or 5 years, and I continue to believe that gold is something that you must have in portfolio. Silver is a different beast altogether. You know, right now there's a bit of a meme going on in the market that कल तक silver EV में भी लग रही थी, commodity में भी लग रही थी, आज सिर्फ वो काजू कतली में लग रही है. So silver is slightly different because the kind of run that it has had. But I think if you ask me, gold I'm still buying.
Okay, gold he's still buying. He's a gold digger. Okay, great. We're all going to dig for gold, and we are hoping that we'll all go and find our El Dorados. That's an important tip. Thank you, Anuj. Thank you very much for giving us your insight. Yes, Nalin, you have a big news coming in.
Quick updates on, we're talking about Eldorados and gold. The metal index has plunged 5%. Gold and silver prices have crashed this morning. Hind Copper, Nalco and Hind Zinc shares have fallen by 19%. The Nifty Metal Index is down 5% from in the early trading hours this morning. Fundamentally, I think what we are seeing is that also crude oil we're rising to $70. So the idea, the fear is it will strain us a lot on in terms of imports and gold. Overall, gold is down by 8% and silver down by 30%, which is the biggest intraday drop since 2008.
Wow. That's big. That's big. Let me also go across to Aditi Nair, who joins us, and Somdata Singh, founder and CEO of Assiduous. Aditi, can you hear me? There you are. Thank you very much for joining us this morning. What are your comments? We're getting divergent numbers this morning. Numbers to be optimistic about, numbers to be optimistic about in the long term. The ones that we have to be optimistic about are rising GST collections, another record being set. And the optimistic numbers, well, are the softening gold and silver prices. Should we go in? Should we not? All of that, of course, that's the macro picture. But I just want to ask you, we're all talking in a global scenario where things are very unpredictable. Day, hours, things can change. How should the FM now approach this budget in this changing, broken world, so to speak?
Thank you. And I think that's a really important question. I mean, we just keep talking about uncertainty and volatility day in and day out. And that's really the situation that we're in globally. There is more and more uncertainty that keeps coming our way. And I think in this situation, the budget and all of economic policy really needs to hunker down and sort of focus on the domestic resilience that is already there and build on strengthening that. Now, going back to the budget nuts and bolts, I think, everything that we've been talking about, the reform push on one side and then coming back to the basics, revenues and expenditures on the other side. As an economist, I lean towards, the budget really being a statement of revenues and expenses. And the bottom line, that is really what I'm looking for as an economist. What are we working backwards from? We have a debt to GDP ratio that we are targeting over the next 4-5 years. Moving back from that, what is the debt to GDP ratio that the budget is going to pencil in today? What is the fiscal deficit to GDP ratio that is consistent with that? And then in the current environment, what are the kind of revenues that we can target with the kind of expectations there are on some rationalization, some simplification, etc. And what do we really have left for expenditure? How are we going to prioritize that? So that's what I'm really looking for from the budget. If we get some reform announcements today, great. If we get them not today, but over the course of the year, I'll still be happy.
Can there be an if and but? That's the fundamental question. Can there be an if and but on reforms? I mean, is this a fait accompli? Let me just bring in Suhail Seth on that before I open this up. We also have Ms. Somdata with us. Yes, Suhail Seth.
No, as Aditi said, if you go back into history, you will see that many budgets were followed by rollbacks. Those rollbacks were either politically instigated or someone had, expressed their infinite stupidity in the preparation of the budget documents. I believe, and I will continue to reiterate, that Rahul, we are facing a massive job crisis in India. We need to wake up and smell the coffee. This constant subsidies, people giving money to buy votes across states, across political parties, that needs to stop. Because when you're funding from the taxpayers' money, then all the things that you spoke about in your opening remarks are not happening. Look at our healthcare track record, miserable. Look at our tourism track record, miserable. Thailand gets more tourists in half a year than we get in 1 year. Why? To this day, tourism is not recognized as an industry, which means it cannot apply for certain loans from banks. Real estate, absolute mess. I mean, you might have fancy apartments and, a few players playing, but look at urban middle income housing. Look at urban infrastructure. You tell me, and I've railed against this, why would people want to invest in India when urban infrastructure sucks in the manner that it does? Look at Gurugram. So, I'm not being a negative person. I'm saying it's time to smell the coffee. The budget excites 3 classes of people. 17 industrialists, from various chambers of commerce who praise the budget on the face of the finance minister. As soon as he or she turns her back, they start abusing the budget. So that's, and I'll tell you the phrases that will be used: transformational, visionary, globally accessible. All these words will come out from all the chambers of commerce. Second, the budget to an average Indian, as Santosh rightly said, is seen more as tax kitna bachega. They are not interested in desh ki tarakki kaise hogi. And the third, my appeal to the Prime Minister and the Finance Minister would be that please focus on ease of business. We need to make India a great manufacturing hub. We cannot be just the factory of the world.
Well, as if on cue.
And I will end by saying that we keep talking about our software prowess and what a great country we are in terms of brilliance of minds. Why are we not producing a Facebook or a Google out of India or NVIDIA?
Well,
the reason is ease of business and a fertile environment.
Well, as if on cue, we have the Prime Minister's pictures coming through. So he'll say it addressing himself to the Prime Minister there, the Prime Minister coming through there on those pictures. He's entered Parliament. Let's just open this up because, plain speaking is required. No one is being negative here. We're just speaking the bare...
Smelling the coffee.
Yeah.
For example, you've got to bring down the cost of capital.
Cost of capital.
For that, you have to reduce your fiscal deficit and your borrowing. For that, what you need to do is disinvestment and asset monetization. I hope this budget has that. Second,
not the subsidy burden? I mean, look at the amount of...
Forget the subsidy because that's politically very difficult to touch.
No, but why? Why shouldn't there be... Look, the government said that this is going to be reforms...
Which subsidy will you cut? Fertilizer subsidy you can't touch. Food subsidy you can't touch because it will be political. You're distributing food to 80 crore people. You can't touch that either. So improve your revenues. And improving your revenues, there's a lot of scope for disinvestment and asset monetization. Second, the banking sector's credit flow to industry has been actually declining. So you've got to set that right. It's the personal loans, which are higher, which are rising and so on, but the credit flow to industry has been very weak. So do something about that. And maybe what you need to do, and I suggested that long ago, is that you start moving on banking sector reforms.
But I was speaking to Piyush Goyal yesterday, and he was saying that, look, now we've opened markets to Indian business. We've opened major markets. We've opened the whole continent of Europe. That's huge. That's 1 billion potential consumers that enjoy greater prosperity than perhaps anywhere else on earth. And industry needs to walk.
But
it needs to, yes.
What you need from the industry is to have the supply side facilitation for industry to take care of it. And that's the third point that I was going to make, which I made earlier. You choose 3, 4, 5 industries, which are labor intensive. Textiles, garments, leather, tourism. And you focus all your attention on that. And I hope the budget will do that. And finally, the real estate sector has something like 200 backward linkages and huge employment potential. Why have a 12.5% long-term capital gains tax on that? Maybe you can remove that and therefore encourage the real estate industry in a big way. So those are the sort of specific things that you want the budget to have.
What about, look, I mean, obviously you would want to see that in the budget. I'm surprised that it hasn't struck us, even when we know that the emergence of Trump will mean that there will be headwinds, Mr. Mehrotra. Why are we not coming to the party? To use and paraphrase Sohail Seth's slogan, smelling the coffee. What's going on?
Rahul, so let me pick up on...
I'm not even talking about the politically tough decisions. We're talking about the basics here. We're talking about what Mr. Rajiv Kumar is saying.
No, and I will pick up on what Rajiv was also saying, but let me first pick up on what Sohail was saying.
Yeah.
So, it's very important that he did mention middle income housing.
Yeah.
What he didn't mention, unfortunately, was low income housing. This country needs massive investment in low income housing, both from public investment, but also the private sector.
Yeah.
Now, public investment can happen partly on government land.
Well, I'm just going to tell the director to open the studio so that we can be seen speaking to each other. Yes, Mr. Mehrotra. Yeah.
Right.
Yeah.
Public investment can happen on government-owned land. Government has a fair bit of, land that it is holding. Unfortunately, it is not being utilized. Secondly, low-income housing is absolute necessity if we want our cities to look a little bit more reasonable, and if we want urbanization to happen and workers to come back in. Workers went away.
Well, let's take a long shot on this. Let's take a long shot. Director Saab, let's take a long shot. Please wake up and smell the coffee. Yes, go ahead. Sir, yeah.
So I'm saying...
Brilliant. Yeah.
So I'm saying, can in the budget we think about some subsidy on interest rates for low-income housing. So, that's building up. So, because otherwise we can't have a situation where simply luxury housing continues to grow.
But, I'm looking at what the opposition is saying. The opposition is saying we have no expectations from this budget. Is that a rational, reasonable statement? Are we going to go through just the motions today? Because we've done so well?
No, I think there's a very defining moment because this year is very important. And this year is going to build on the future years which are to come. And this is when we, give allocations to the reforms which have happened in financial year 2025. We look at some interventions to keep the growth drivers of the economy revved up and also unleash some new growth drivers. For example, we were just talking about domestic demand. The economic survey says that's a great, bright spot in the Indian economy. I do hope and look forward to some stimulus in the economy at this point in time, which would,
Somdata Singh, what sort of stimulus should we expect?
See, I heard what Suhail had to say and all the marquee panelists. There are a few things which is very, very important for here to highlight. One, we have already seen the unpredictability of the global ecosystem like the Trump can take a big beating on India, right? We can talk a lot about our internal competencies, our internal protocols, our internal production. But the truth is most of our production that we have in India often doesn't even meet the requirements of quality in the international standards. I run a company that is into cross-border distribution and supply chain. We are the third largest. And let me tell you something. Sometimes not only is export into India or export outside of India or import into India is a nightmare, but most of our quality standards are not in place. That is purely because, one, we don't have a skilled economy. We are a 1.5 billion consumer. We can harp around it, but we don't have the skilled economy. We don't have the right regulations when it comes to customs or imports that allows us very qualitative method of importing and exporting products within the region. Now with this 10-year-long battle being fought, EU agreement being signed, we are the largest exporters to EU and then importers. I feel we'll become more an import hub than an export hub, to be very honest with you.
Okay.
Again,
well, big news
our
coming in.
infrastructure, there are huge infrastructure challenges. Look at it. I have a big team sitting out of Bangalore. I'm joining from Dubai. And let me tell you something. Dubai is growing, Dubai's e-commerce, and because we are largely in e-commerce, is growing at a faster rate than India. And there's a reason to it. The ease of business. The ease of business is the most paramount fundamental of any economic growth within a region. No matter how much you talk about the budget, which is more like an annual operating plan for a country, unless you have the basics, which is access to working capital, access to proper supply chain, subsidized warehousing and infrastructure management, skilled labor, and there is a minimum capacity optimization on quality and infrastructure, we can talk about budget year on year.
Okay.
Rahul, but it is not going to give us the...
completely agree with you. I think you're absolutely right. And I think, Suhail, plain speaking from both of you, absolutely spot on. Let me also bring in Parikshat Luthra, a colleague of mine from CNBC TV 18. Straight across, he's going to be interviewing Piyush Goyal today, probably the first journalist who will get that interview. So it'll be interesting because we're looking really at very unpredictable times, Parikshat. We're looking at trade being politicized, weaponized. We're looking at pressures on the Indian economy where we didn't expect. We're looking at a political class that is completely right now going after the FM for mismanagement. You know what I'm talking about. What can she do really to transform this economy into one that is firewalled against all these changes? Sunil Agarwal also joins us. Yes.
You know, the theme of this budget, I'm quite sure, will be resilience. Resilience in very turbulent times. We're possibly going to see the finance minister increase capex and record capex for defense expenditure. It could be as high as 15 to 20%. We're going to see a major rejig of customs duties. Why is this important? Because you want to make exports more competitive. You're having trade deals with a number of nations, but at the same time, you want to make sure that the import of raw materials comes at the lowest possible cost to the Indian manufacturer and the exports go out at the lowest possible cost as well. We will see ease of living, ease of taxation, ease of compliance. All these messages will be very important. Somehow there will be a message to global investors that we want to create a very sustainable, durable environment for foreign portfolio investors and FDI investors as well. Now, talking about the turbulent times, we're seeing that India is embarking on a very strong diversification strategy. Be it energy, be it trade as well. Donald Trump has tweeted to say India will be buying Venezuelan oil. We are getting to know from analysts that perhaps there's only one company which is buying Venezuelan oil right now. It's going to be difficult in terms of buying oil from Venezuela because it's very hard crude, it's difficult to refine, it's costly to refine as well, but Venezuela will be a part of our diversification strategy. So be it trade, be it energy, we will diversify, we will not put all our eggs in one basket, that is the United States, but at the same time, we have our eyes on the ball. I'm sure Piyush Goyal has his eyes on the ball when it comes to the United States, and they are working on trying to negotiate and conclude a trade deal with the US at the earliest.
Okay, so Parikshit, thank you very much for giving us that overview. Custom duties, ease of living, ease of compliance are his top picks. We're going to be focusing laser-like, viewers, and we're going to have Insta analysis. As the FM starts speaking, our experts will give you their take on what she's saying. Now, let's just pull out some of these numbers because this export shock is what we're really worried about, because this is what really has been unfortunate aspect of these Trump tariffs. So there are certain sectors, the textile and apparel sector, orders have been deferred and cancelled, and you can see that on your screens. It's coming out through our studio floor, this particular graphic. Let's look at engineering goods, price uncompetitive, that's a problem. Sunil Alag, you probably involved with industry, auto components, margins wiped out. This is a problem. This is a problem, and I'm going to ask both of you to tell us how this can be addressed, and is the budget the place?
See, all I'm saying is 75% is budget for the year. Is 75%. And 25% is strategy, which is the vision of Mr. Modi.
See, that's the issue.
The vision is correct, but what the person is wanting to do is to increase employment. Internally, he has to increase employment. Otherwise, he will not be elected. So there's no question of anyone, which I was on the Hindi channel downstairs. But I was saying that, look, either in infrastructure, what China did was infrastructure spending. It did not decrease at all. So consumer spending internal, that has to be done. Now manufacturing has to be increased, but the Hindi channel said, but manufacturing, only the power sector, which is the power private companies are actually generating power and they are losing money. So where's the question of manufacturing coming in? The government might say manufacturing, wo, but it's not going to happen.
I totally agree with him. See, because while you're going to be the fourth largest economy in the world, you have, say, 7% growth rates. That is not reflecting in jobs on the ground and increments in new earners coming into it. So any government, whether it's this government or any other government, has to solve this issue. We have to. Our manufacturing is somewhere around 16% of GDP, right? It should be much more, and we can't follow the China model as it was.
Nalin, increasing the share of manufacturing in the GDP does not assure you jobs any longer. So therefore, what you've got to do is something that I had mentioned earlier. I'm repeating myself. Go after tourism, for God's sake. Go after leather exports. Go after garment exports. Bangladesh exports more than you. Why should you be able to do that? Engineering, auto components. Go for those. But so therefore, the thing is that you can't escape the fact that you've got to get the export demand going. And this government or any previous government has not been able to incentivize exports to the extent
let me ask some of the business.
We need a paradigmic shift on that, Rahul. Incremental change
paradigm shift is needed. Suhail Seth.
I will say this, as I said in my opening remarks, your largest generators of employment are tourism and real estate. Luckily or unluckily, they don't require that level of skilling. Having said that, what the hell has happened to the NSDC, the National Skilling Development Corporation? The problem is we have more institutions than people actually delivering through them. Now take, for example, tourism. Cost of land is so high that a hotel company or hospitality company will never invest because the return on capital will be miserable. Now look at the ease of business there. To open a bar in a hotel will take you forever. Today, the Gift City in Ahmedabad is an outstanding example of an international financial center. It took them, with Mr. Modi's intervention, years to, get a liquor license. I'm only saying two things. One is you need jobs and jobs and jobs, and you need more skilled Indians. I hate to say this. Try getting hold of a skilled plumber. And here, some of our famous industrialists used to use words like jugaad. That is what has destroyed India's competence. Because jugaad is more a shortcut than actually skilled, process-driven work. We are not focusing on that, Rahul. And until we focus on that, Sunil also said, you will have a budget, but you will have vision which is not being implemented upon. And that's what you need. You need the budget to be transformational. Today, you can't get skilled people. I mean, I hate to say this, but I'm proud of that. The Northeast contributes almost 70% to front of house staff in most hotels.
True.
Because of language skills. Today, the language skills are abominable. So I'm saying all these things we need to work on here. We can't just keep saying, "Bhai, budget aayega to pura duniya change ho jayegi."
Okay. Well, I'm just bringing you in, ma'am. I just also want to bring in the other entrepreneur, and news breaking also that the cabinet has approved the budget. This is almost an expected thing. It's part of the process. Ms. Somdata Singh, yes.
So, as an entrepreneur, there's one of the things that I want to highlight here, because we were talking about skilled people, skilled laborers, where is skilling happening? There's a national skill organization, where is the output? And especially with India having 40% of our population under the age group of 35. It's all the brain drain. You may still think that, it's not happening. There's a lot of reverse brain drain happening from outside. Most of the Indian population, and we hire people in GCC, most of the Indian population is moving to GCC. One, because of tax, there's no income tax, right? So you get to save all the money. There's a minimum wage that the government mandates all the organizations that have to pay because of the quality of the labor that you're importing from a different nation into the GCC region. So where do you find talent? Most of the talent today is so subsidized, is so migrating towards other countries that you can't find talent within the home geography. The second thing that we were all talking about is that the subsidies or the access to working capital. How do you increase manufacturing, Rahul, when you have to sit in a bank and do paperwork for months together just to validate whether your business is worth funding? And in other cases, without even having stock in inward stock ratio or a manufacturing setup, there are businesses that are getting funded. Also, the competency when it comes to Indian production. We say we are innovators. We are innovators outside of our country. We are innovating for Google and Microsoft. Yeah. But can I tell you something? Even in food and beverages, we are copycats. We copy what has worked in United States, try to bring it into India, try to subsidize the quality, and then try exporting the same product out. And the reason I'm able to draw these statistics to you is because we are one of the largest exporters of food and beverages outside of India for some of the largest Indian names. Right. They don't pass the quality test.
Well,
so
okay.
At the end of the day,
these are very important suggestions coming from stakeholders, viewers. These are not people who don't know what they're talking about and are just being negative for the sake of being negative. This is not that. This is a constructive conversation. I just want to quickly bring in Sumita Daura. You had a point to make.
Yes, we were talking about exports.
Yeah.
You see, quality of exports, testing labs for exports is something we can expect in the budget. Similarly, the customs we've already spoken about, the rationalization, the inverted duty structures, we can expect some reform there. We can also expect the QCOs. The already good work has been going on, and probably more focus on withdrawing the unnecessary QCOs which are hindering the quality upgrade in the economy, more outreach to the market, and also bringing in more investments. Again, I would say the FDI is to build the scale and the connectivity to the regional markets, the regional trade agreements. We should also look towards ASEAN, and probably we could consider the Trans-Pacific Partnership. We need to look at other regional.
Yeah, they're being renegotiated,
yeah.
Mr. Garg, on this whole issue of trying to get investment to come in, demand to increase.
See, the budget has a very important role to play in attracting investments. I think this goes without saying. Through the FDI route, through the FPI routes, and even otherwise.
I'm asking you, is this make or break time?
There is never a make or break time. It's a continuum which is always going on. And the policy is also, you don't make for the 100% of the economy all the time. You make the policy for what is going to sort of add value in future. That's why, to my mind, if we look at the policy framework for attracting investment, we should be looking at the policy on the products of the future. The future products are in the renewable energy transition space, the solars, cells, modules, wind, hydrogen, and those kind of things. Can we get those technologies here? Can we guys get those investment here? And one of the things which is very important there is that most of these are sort of controlled by the Chinese companies. Can we allow the Chinese investment to come in the country? That is where the policy making should lead to if you want to get more investment in the country.
Okay, I'm going to go across because the big elephant in the room, of course, is the jobs outlook. And that's really something that I'm going to look at with some numbers. Always put the data first, and I'm going to take gentlemen in our studio as well as Sumita ji, get her to give us a little bit of an overview on this. This is the problem, viewers, as you can see. Employment, while absolute numbers might have grown, many people say that these are not jobs that are quality jobs. And that's really the issue here. It's not absolute numbers, but it is quality jobs. So while that number looks about 15% up, you have to look at this. Yes, sir. Yeah.
3 crore translates to 643 million, which is actually the size of our workforce. Pretty much. So I don't know where this number is coming from. If this is all coming out of the EPFO, then the whole workforce is therefore formalized.
Well, this is another question that people have sort of put. The youth unemployment numbers are, at 10.2%. Some people say they're actually higher. They're in the 18 or 17% category. So, look, I mean, numbers, and I'm sorry to say this, but there is always a debate around the numbers, the quality of the numbers, the quality of the data itself. Is that a problem to begin with first, sir? Is the quality of the numbers suspect? First of all, I want to ask you this question because this is what is constantly talked about.
The definition of employment in this country, and along with, according to which the PLFS survey is done,
that's right,
has to be changed very quickly. 1 week's employment for the whole month qualifies you to be said that you're employed. 1 month in a year qualifies you to be. If you're self-employed on family labor without pay, and that is where the women participation rates have gone up, you are employed. So I think all of those numbers, definition.
So the definition is the problem, perhaps not the data. No one's fiddling the data, it's just that the definition needs to be changed. Would you agree?
But I'd agree with everything, but South India is where when I was in Hyderabad, and it is not our government at all, but not BJP government. But when South India accounts for so much of GDP growth comes from South India and Northeast, as somebody else has said. But where do we pay attention? We pay attention only around Delhi when the budget, and budget has no meaning anymore.
Has no meaning?
Has no meaning because every 3 months Modi is going to change.
Would you say that, Sunita, has no meaning?
I would again say this budget is a chance to turbocharge India onto a higher growth trajectory.
Is it one of the last few chances? Or will we then settle in a very comfortable middle income trap? And that's it.
It's a continuous
That's why I was asking you,
exercise.
is this a make or break moment? Are we in that place?
We are going to have continuity in whatever reforms we brought in for Viksit Bharat and also for inclusive growth.
But Viksit Bharat needs sustained 8%. If you have to hit those targets, you want to be the #1 economy, you want to be the world
you need
leader,
to grow
8%,
faster.
we're not hitting 8%. Come on,
we
let's
need
be
to grow
honest.
faster, and there are certain sectors.
Okay, not hitting 8%, Mr. Garg, why?
See,
I'll bring in Suhail Seth. He's going to cut through all of this and going to give you absolutely the hard one.
So let us first deal with this employment and the worker question. I think there are two aspects of it. One is the quality of data, about 65 crores or something.
Yeah.
That includes a lot of people who are employed for a very little while.
Okay,
and
so the
also
definition is a
those who are
problem.
not employed.
Yeah.
But that's fine. 65 crore is the number which is actually put out as counted as workers.
Yes.
But the side which we generally miss is that what is the wages they are earning? Because that is where the demand comes, where the income of the workers.
Yeah.
So workers work for wages.
Yeah.
And that wage increase you would find is not taking place at all. And that is what the worry is. The chief economic advisor in last year's economic survey put out a number, again taking from the EPFO survey, that the real wages for the whole lot of self-employed and the casual workers is actually declining in nominal terms. So that is the cause of concern. Now about 8% kind of thing, 8% growth will come. You see, we know in composition of our economy.
No, can this budget give you, can spur the growth engine, yes or no? Because someone here said budgets don't matter.
Not much. It can.
It can,
is
not
important, but it can make very important intervention.
Okay.
But it is not the decider of the growth.
Not the decider.
Rahul,
Okay.
there's an old aphorism that India only reforms when there's a real big crisis. We saw that in 1991.
Yeah.
In the last year, we've dealt with a lot of crises induced by Trump after Sindoor.
Yeah.
So you've seen a slew of reforms, a slew of movements, GST reform, reforms in pension, a regulatory push has been happened with SEBI and RBI to clear a lot of things. We've seen a reform in our legislation on nuclear energy as well as on coastal. And that is an important one because if you look at logistics, the cost of logistics in India is higher than in most other countries. The point I want to make is this reform momentum has to continue. And we get happy we've removed 12 QCO orders. The problem is that those were put by ourselves only a couple of years ago. There's still 800 more to be removed.
Okay,
And the
so
measure is not where you
yes.
compared 2 years ago. Measure is where we are compared to Dubai or Vietnam or Indonesia.
There are still 760 odd QCOs in place.
Right.
But two things that the budget can do, which will take it to 8%, reduce the cost of capital for the private sector, especially for the medium and small enterprises, by reducing the burden of your fiscal deficit.
Yeah.
And two, ease of doing business. Really go
Ease
after
of doing business.
Go after it. Go after it in a manner that
Four words, Suhail said 4 words.
Which
What do you want? What do you exactly, which you started with, what do you want? What do you want to hear the FM say today? Look, we can listen to another 1 hour long speech, but inside scoop of what the Prime Minister told the Cabinet. Let's hope that he has told the Cabinet that this particular budget is going to send us down a path of massive growth because we are reforming. We're going to make sure that the ease of doing business in our country is going to improve by leaps and bounds. He says, keep in mind the 2047 goal. Is this budget going to meet those expectations? Is this budget going to reload reforms in a manner that haven't been done before? Is it going to be instrumental in getting rid of those bottlenecks that we keep talking about year after year, but only act upon when there's crisis? And why should that be the case, viewers? Why should that be the case? Why should we only wake up when we get a tight slap? Why can't we move quicker, faster, stronger, swifter, and do what is needed without crisis? Yes.
Mainly because.
Yeah. Okay. Suhail said. I asked him. Yes.
The union budget. Yeah. The union budget is excitable for three classes.
You said.
One is for television channels because they have a full day. TRPs go up, you get sponsorships, blah blah blah. Okay. Number 2 for chambers of commerce because people who you had forgotten or you had assumed were dead will be brought back from the woodwork to hail the budget as transformational and visionary. Number 3. You will hear secretaries to the government of India waxing eloquent about jargon that you and I can never understand in our lifetime. So I'm not bothered about the union budget. It is just a statement of accounts where, depending on who the finance minister is, you will also get a minuscule crash course in civilizational history by quoting some poet who the whole world has forgotten. So forget the union budget. What is important are the issues that the entire panel has raised. My belief is that the finance minister and the prime minister have good intent. We need execution. The situation with India is operation successful, patient dead. So being happy with a budget is like getting married to a corpse. Only you will feel good because the corpse doesn't even know. So my point is, make the budget either a policy document or a statement of accounts. You can't have partial pregnancy. Sunil Alagh mentioned 75-25. No. The vision document has to be distinct. And as Rajiv mentioned in his earlier remarks, the states must also contribute. Today, trust me, everyone is on the subsidy bandwagon. You saw what these Johnnies did in Maharashtra, 10,000 rupees just before the election.
Yeah.
Was it Maharashtra?
Yes.
It was Maharashtra.
Yes.
Now every state is doing it, so we don't even know which state did it. Now, if this is what you're doing, I mean, what the hell is...
Yeah. Well, look, I mean, yes, you have a point there, but as someone was saying on the panel, I think it was Rajiv Kumar, these are politically loaded issues. Cannot mess about.
The budget is not being presented by Karan Johar.
Okay. So you're saying it's a okay. So you're saying it's a political statement at the end of the day. It's got nothing to do with anything. But this is the point, Rajiv Kumar. Are you sort of giving the government too long a rope? I think the time has come to bite the bullet. I mean, you can't say, and that's what we've heard from Piyush Goyal many times, telling industry, "Come on, walk with me," but then you don't incentivize industry.
No, but
you don't have. Yes, go ahead.
Rahul, just the opposite of giving the government a long rope. I've been saying the government has to bite the bullet and get the ease of doing business.
No, that is fine. But what about subsidies, sir?
Two,
huge expense. It bloats our fiscal.
You have to focus on a few sectors and incentivize them so that they can, they can grow at
that is
12,
true.
15%.
Look, those are narrow prescriptions, but there are larger issues, and we talk about it all the time.
Larger issues like
inflating subsidy bill, which puts so much pressure on the fiscal deficit. It's getting worse. The Prime Minister came up with Revdi, said that, look, we shouldn't get into this competitive race, but then the BJP itself put out some Revdi. So how does this work?
It doesn't work.
Yeah, so when are we going to bite that bullet? And why can't the budget take a position and say, look, from now on, we're increasing taxes here on these people who are out of the net and so on and so forth? Why can't that happen? Okay, it's all coming together. In just a minute, Parliament is going to be convening and the Finance Minister will be speaking. So we are in the countdown minute now. Anand, we are in the countdown minute. He joins me. Anand, you've been speaking to a lot of our guests and our panel. What's really the focus? What are you hearing now? We're getting all sorts of breaking news. Can we put some money to these words and say that this is going to be a budget that is going to take the hard decisions?
Well, the Bahikhata has become electronic and I'm walking with my laptop around, but and I'll keep it here. But the fact is, the question that you asked, is the government going to facilitate, let me say, is the government going to facilitate job creation? Is the government going to give hard policy and give...
I rise to lay on the table a copy each of the following papers, Hindi and English versions, under Article 281 of the Constitution, Report for 2026 to 2031, Volume 1, Main Report of the 16th Finance Commission. 2. Report for 2026-2031, Volume 2, Annexures of the 16th Finance Commission. Number 3. Explanatory memorandum as to the action taken on the recommendations contained in the above report.
Item number 2, माननीय वित्त मंत्री निर्मला सीतारमण जी.
Honorable Speaker, sir, on the sacred occasion of Magh Purnima and the birth anniversary of Guru Ravidas, I present the budget for the year 2026-2027. Since we assumed office 12 years ago, India's economic trajectory has been marked by stability, fiscal discipline, sustained growth, and moderate inflation. This is the result of conscious choices we have made, even in times heightened uncertainty and disruption. Our government, led by Honorable Prime Minister Modi, has decisively and consistently chosen action over ambivalence, reform over rhetoric, and people over populism. We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment. Keeping Atmanirbharta as a lodestar, we have built domestic manufacturing capacity, energy security, and reduced critical import dependencies. Simultaneously, we have ensured that citizens benefit from every action of the government, undertaking reforms to support employment generation, agricultural productivity, household purchasing power, and universal services to people. These measures have delivered a high growth rate of around 7% and helped us make substantial strides in poverty reduction and improvement in the lives of our people. Today, we face an external environment in which trade and multilateralism are imperiled and access to resources and supply chains are disrupted. New technologies are transforming production systems while sharply increasing demands on water, energy, and critical minerals. India will continue to take confident steps towards Vikasit Bharat, balancing ambition with inclusion. As a growing economy with expanding trade and capital needs, India must also remain deeply integrated with global markets, exporting more and attracting stable long-term investment. As I begin Part A, I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. Our aim is to transform aspiration into achievement and potential into performance as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Vikasit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti-driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by three Kartavya. Our first Kartavya is to accelerate and sustain economic growth by enhancing productivity and competitiveness and building resilience to volatile global dynamics. Our second Kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third Kartavya, aligned with our vision of Sabka Saath, Sabka Vikas, is to ensure that every family, community, region, and sector has access to resources, amenities, and opportunities for meaningful participation. This threefold approach requires a supportive ecosystem. The first requirement is to sustain the momentum of structural reforms, continuous, adaptive, and forward-looking. Second, a robust and resilient financial sector is central to mobilizing savings, allocating capital efficiently, and managing risks. Third, Cutting-edge technologies, including AI applications, can serve us as force multipliers for better governance. Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025, over 350 reforms have been rolled out. This includes GST simplification, notification of labor codes, and rationalization of mandatory quality control orders. High-level committees have been formed, and in parallel, the central government is working with the state governments on deregulation and reducing compliance requirements. The Reform Express is well on its way and will maintain its momentum to help us fulfill our kartavya. I now move to specific proposals. Under our first kartavya, to accelerate and sustain economic growth, I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions. Scaling up of manufacturing in 7 strategic and frontier sectors. Biopharma Shakti, meaning biopharma strategy for health advancement through knowledge, technology, and innovation. India's disease burden is observed to be shifting towards non-communicable diseases like diabetes, cancer, and autoimmune disorders. Biologic medicines are key to longevity and quality of life at affordable costs. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. The strategy will include a biopharma-focused network with 3 new national institutes of pharmaceutical education and research, popularly known as NIPERs, and upgrading 7 existing ones. It will also create a network of 1,000 accredited India clinical trials sites. We propose to strengthen the Central Drug Standard Control Organization to meet global standards and approve timeframes through and approval timeframes through a dedicated scientific review cadre and specialists. India's Semiconductor Mission 1.0 expanded India's semiconductor sector capabilities. Building on this, we will launch ISM 2.0 to produce equipment and materials, design full-stack Indian IP, and fortify supply chains. We will also focus on industry-led research and training centers to develop technology and skilled workforce. The Electronics Components Manufacturing Scheme, launched in April 2025, with an outlay of 22,919 crores, already has investment commitments at double the targets. We propose to increase the outlay to 40,000 crores to capitalize on this momentum. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh, and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research and manufacturing. To enhance domestic chemical production and reduction import dependency and reduce import dependency, we will launch a scheme to support states in establishing 3 dedicated chemical parks through challenge route on a cluster-based plug-and-play model. Strong capital goods. Strong capital goods capability is a determinant of productivity and quality across different sectors. Towards building this capacity, I propose the following. High-tech tool rooms will be established by central public sector enterprises at 2 locations as digitally enabled automated service bureaus that locally design, test and manufacture high-precision components at scale and at lower cost. 2. A scheme for enhancement of construction and infrastructure equipments will be introduced to strengthen domestic manufacturing of high value and technologically advanced CIE. This can range from lifts in a multi-storied apartment or firefighting equipment in multiplexes, large or small, and to tunnel boring equipments for building metros and high-altitude roads. I also propose a scheme for container manufacturing to create a globally competitive container manufacturing ecosystem with a budgetary allocation of 10,000 crores over a 5-year period. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for Self-Reliance in Natural Fibers, such as silk, wool and jute, man-made fibers, and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco Initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom and handicrafts. This will help in global market linkage and branding. It will streamline and support training, skilling, quality of process and production. This will benefit our weavers, village industries, One District, One Product ODOP initiative and also our rural youth. India has the potential to emerge as a global hub for high quality, affordable sports goods. I propose a dedicated initiative for sports goods that will promote manufacturing, research, and innovation in equipment design as well as material sciences. Rejuvenation of legacy industrial clusters. I propose to introduce a scheme to revive 200 legacy industrial clusters to improve their cost competitiveness and efficiency through infrastructure and technology upgradation. Creating champion SMEs and supporting micro enterprises. Recognizing MSMEs as a vital engine of growth, I propose a three-pronged approach to help them grow as champions. Equity support. I propose to introduce a dedicated 10,000 crores SME growth fund to create future champions, incentivizing enterprises based on select criteria. I also propose to top up the Self-Reliant India Fund set up in 2021 with 2,000 crores to continue support to micro enterprises and maintain their access to risk capital. Liquidity support. With TREDS, more than 7 lakh crore has been made available to MSMEs. To leverage its full potential, I propose 4 measures. 1. Mandate TREDS as the transaction settlement platform for all purchases from MSMEs by CPSEs, serving as a benchmark for other corporates. 2. Introduce a credit guarantee support mechanism through CGTMSE for invoice discounting on TREDS platform. 3. Link GEM with TREDS for sharing information with financiers about government purchases from MSMEs, encouraging cheaper and quicker financing. 4. Introduce TREDS receivables as asset-backed securities, helping develop a secondary market, enhancing liquidity and settlement of transactions. Professional support. Government will facilitate professional institutions such as the ICAI, ICSI, ICMAI to design short-term modular courses and practical tools to develop a cadre of corporate mitras, especially in Tier 2 and Tier 3 towns. These accredited para-professionals will help MSMEs meet compliance requirements at affordable costs. Infrastructure. During this past decade, our government has undertaken several initiatives for large-scale enhancement of public infrastructure, including through new financing instruments such as Infrastructure Investment Trust (InvITs) and Real Estate Investment Trust (REITs), and institutions like NIIF and NABFID. We shall continue to focus on developing infrastructure in cities with over 5 lakh population, that is Tier 2, Tier 3 cities, which have expanded to become growth centers. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. To strengthen the confidence of private developers regarding risks during infrastructure development and construction phase, I propose to set up an infrastructure risk guarantee fund to provide prudentially calibrated partial credit guarantee to lenders. Over the years, REITs have emerged as a successful instrument for asset monetization. I propose to accelerate recycling of significant real estate assets of the CPSEs through the setting up of dedicated REITs. To promote environmentally sustainable movement of cargo, I propose to 1. Establish new dedicated freight corridors connecting Dankuni in the east to Surat in the west. Operationalize 20 new national waterways over the next 5 years, starting with National Waterways 5 in Orissa to connect mineral-rich areas of Talcher and Angul and industrial centers like Kalinga Nagar to the ports of Paradeep and Dhamra. Training institutes will be set up as regional centers of excellence for development of required manpower for these waterways. This will benefit youth in the entire stretch of the waterways to train and acquire skills. Further, a ship repair ecosystem catering to inland waterways will also be set up at Varanasi and Patna. And C, launch a coastal cargo promotion scheme for incentivizing a modal shift from rail to road to increase the share of inland waterways and coastal shipping from 6% to 12% by 2047. To enhance last mile and remote connectivity and promote tourism, I propose to give incentives to indigenize manufacturing of seaplanes. A seaplane VGF scheme will be also introduced to provide support for operations. Carbon capture, utilization and storage. Aligning with the roadmap launched in December 2025, the carbon capture, utilization and storage technologies at scale will achieve higher readiness and in end-use application across 5 industrial sectors, including power, steel, cement, refineries, and chemicals. An outlay of 20,000 crore is proposed over the next 5 years for this purpose. City economic regions. Cities are India's engines of growth, innovation, and opportunities. We shall now focus on Tier 2, Tier 3 cities, and even temple towns, which need modern infrastructure and basic amenities. This budget aims to further amplify the potential of cities to deliver the economic power of agglomerations by mapping city economic regions based on their specific growth drivers. An allocation of 5,000 crore per CER over 5 years is proposed for implementing their plans through a challenge mode with a reform cum result based financing mechanism. In order to promote environmentally sustainable passenger systems, we will develop 7 high-speed rail corridors between cities as growth connectors, namely Mumbai to Pune, Pune to Hyderabad, Hyderabad to Bengaluru, Hyderabad to Chennai, Chennai to Bengaluru, Delhi to Varanasi, Varanasi to Siliguri. Financial sector. The Indian banking sector today is characterized by strong balance sheet, historic highs in profitability, improved asset quality, and coverage exceeding 98% of villages in the country. At this juncture, we are well placed to futuristically evaluate the measures needed to continue on the path of reform-led growth of this sector. I propose setting up a high-level committee on banking for Vikasit Bharat. High-level committee on banking for Vikasit Bharat to comprehensively review the sector and align it with India's next phase of growth, while safeguarding financial stability, inclusion, and consumer protection. The vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs. As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. I propose to introduce a market-making framework with suitable access to funds and derivatives on corporate bond indices. I also propose to introduce total return swaps on corporate bonds. Municipal bonds. To encourage the issuance of municipal bonds of higher value by larger cities, I propose an incentive of 100 crore rupees for a single bond issuance. 100 crore rupees for a single bond issuance of more than 1,000 crore. The current scheme under Amrit which incentivizes issuances up to 200 crores only, will also continue to support smaller and medium towns. That will also continue to support the smaller and medium towns. Ease of doing business. Individual persons resident outside India, PROI, will be permitted to invest in equity instruments of listed Indian companies through the portfolio investment scheme. It is also proposed to increase the investment limit for an individual PROI under the scheme from 5% to 10%, with an overall investment limit for all individual PROIs to 24% from the current 10%. Emerging technologies including AI. 21st century is technology driven. Adoption of technology is for the benefit of all people. Farmers in the field, women in STEM, youth keen to upskill, and Divyangjan to access newer opportunities. The government has taken several steps to support new technologies through AI Mission, National Quantum Mission, Anusandhan National Research Fund, and Research and Development and Innovation Fund. Our second kartavya is to fulfill aspirations and build capacities. Close to 25 crore individuals have come out of multi-dimensional poverty through a decade of our government's sustained and reform-oriented efforts. Our government has therefore decided to place a renewed emphasis on the service sector to provide a pathway to fulfilling aspirations of a youthful India with the following measures. I propose to set up a high-powered education to employment and enterprises standing committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment, and exports. They will also assess the impact of emerging technologies, including AI, on jobs and skill requirements and propose measures thereof. To create a range of skilled career pathways, a new range of skilled career pathways for our youth, I propose interventions in the following sectors. Health. Existing institutions for allied health professionals will be upgraded and new AHP institutions established in private and government sectors. This will cover 10 selected disciplines, including optometry, radiology, anesthesia, OT technology, applied psychology and behavioral health, and add 1 lakh AHPs over the next 5 years. A strong care system covering geriatric and allied care services will be built. A variety of NSQF-aligned programs will be developed to train multi-skilled caregivers, combining core care and allied skills such as wellness, yoga, and operation of medical assistive devices. In the coming year, 1.5 lakh caregivers will be trained. Hubs for medical value tourism. To promote India as a hub for medical tourism services, I propose to launch a scheme to support states in establishing 5 regional medical hubs in partnership with the private sector. These hubs will serve as integrated healthcare complexes that combine medical, educational, and research facilities. They will have Ayush centers, medical value tourism facilitation centers, and infrastructure for diagnostics, post-care, and rehabilitation. These hubs will provide diverse opportunities, job opportunities for health professionals, including doctors and AHPs. Ancient Indian yoga, already respected in several parts of the world, was given a mass global recognition when Honorable Prime Minister took it to the UN. Post-COVID, Ayurveda gained a similar global acceptance and recognition. Exporting quality Ayurveda products helps farmers who grow the herbs and youth who process the products. To meet growing global demand, a few more steps are being taken. I propose to 1. Set up 3 new All India Institutes of Ayurveda. 2. Upgrade Ayush pharmacies and drug testing labs for higher standards of certification ecosystem and make available more skilled personnel. 3. Upgrade the WHO Global Traditional Medicine Center in Jamnagar to bolster evidence-based research, training, and awareness for traditional medicine. Animal husbandry. Livestock contributes to close to 16% of farm income, including of poor and marginal households. To scale up availability of veterinary professionals by more than 20,000, I propose to roll out a loan-linked capital subsidy support scheme for establishment of veterinary and para-veterinary colleges, veterinary hospitals, diagnostic laboratories, and breeding facilities in private sector. Collaboration between Indian and foreign institutions will also be facilitated. Orange economy. India's animation, visual effects, gaming and comics sector, AVGC sector, is a growing industry projected to require 2 million professionals by 2030. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up AVGC content creator labs in 15,000 secondary schools all over the country and 500 colleges. The Indian design industry is expanding rapidly, and yet there is a shortage of Indian designers. I propose to establish, through Challenge Route, a new National Institute of Design to boost design education and development in the eastern region of India. Education. Our government will support states through Challenge Route in creating 5 university townships in the vicinity of major industrial and logistics corridors. These planned academic zones will host multiple universities, colleges and research institutions, skill centers and residential complexes. In higher education, STEM institutions, prolonged hours of study and laboratory work pose some challenges for girl students. Through VGF, Viability Gap Funding and capital support, one girls' hostel will be established in every district. To promote astrophysics and astronomy via immersive experiences. 4 telescope infrastructure facilities will be set up or upgraded. The National Large Solar Telescope, the National Large Optical Infrared Telescope, the Himalayan Chandra Telescope, and the Cosmos 2 Planetarium. Tourism. The tourism sector has the potential to play a large role in the employment generation, forex earnings, and expanding the local economy. I propose to set up a National Institute of Hospitality by upgrading the existing National Council for Hotel Management and Catering Technology. It will function as a bridge between academia, industry, and government. I also propose a pilot scheme for upskilling 10,000 guides in 20 iconic tourist sites through a standardized, high-quality, 12-week training course in hybrid mode in collaboration with the Indian Institute of Management. A national destination digital knowledge grid will be established to digitally document all places of significance, cultural, spiritual, and heritage. This initiative will create a new ecosystem of jobs for local researchers, historians, content creators, and technology partners. India has the potential and opportunity to offer world-class trekking and hiking experience. We will develop ecologically sustainable mountain trails in Himachal Pradesh, Uttarakhand, and Jammu Kashmir. Also in Araku Valley in the Eastern Ghats and Podigai Malai in the Western Ghats. Turtle trails along key nesting sites in the coastal areas of Odisha, Karnataka, and Kerala. And 3 bird watching trails along the Pulikat Lake in Andhra Pradesh, Tamil Nadu. It's on the border. Under the visionary leadership of Honorable Prime Minister, we established the International Big Cat Alliance in 2024. This year, India is hosting the first ever Global Big Cat Summit, where heads of governments and ministers from 95 range countries will deliberate on collective strategies for conservation. Heritage and culture tourism. I propose to develop 15 archaeological sites, including Lothal, Dolavira, Rakhi Gadi, Adichanallur, Saranath, Hastinapur, and Leh Palace into vibrant experiential cultural destinations. Excavated landscapes will be open to the public through curated walkways. Immersive storytelling skills and technologies will be introduced to help conservation labs, interpretation centers, and guides. The sports sector provides multiple means of employment, skilling, and job opportunities. Taking forward the systematic nurturing of sports talent, which is set in motion through the Khelo India program earlier, I propose to launch a Khelo India mission to transform the sports sector over the next decade. The mission will facilitate an integrated talent development pathway supported by training centers, which are foundational, intermediate, and elite levels. B, systematic development of coaches and support staff. C, integration of sports science and technology. D, competitions and leagues to promote sports culture and provide platforms. And E, development of sports infrastructure for training and competition. Our third Kartavya aligns with our vision of Sabka Saath, Sabka Vikas towards Vikasit Bharat. This requires targeted efforts for 1. Increasing farmer incomes through productivity enhancement and entrepreneurship, with special attention to small and marginal farmers. B. Empowering Divyangjan through access to livelihood opportunities, training, and high-quality assistive devices. C. Empowering the vulnerable to access mental health and trauma care. D. Focus on the Purvodaya states and the Northeast region to accelerate development and employment opportunities. Fisheries. We will undertake initiatives for integrated development of 500 reservoirs and Amrit Sarovars. 2. Strengthen the fisheries value chain in coastal areas and enable market linkages involving startups and women-led groups together with fish farmer producer organizations. Animal husbandry. To provide quality employment opportunities in rural and peri-urban areas, we will support the animal husbandry sector in entrepreneurship development through A. A credit-linked subsidy program. B. Scaling up and modernization of livestock enterprises. C. Enhanced creation of livestock, dairy, and poultry. I'll read that again. Enhanced creation of livestock, dairy, and poultry-focused integrated value chains. And D. Encourage creation of livestock farmer-producer organizations. High-value agriculture. To diversify farm outputs, increase productivity, enhance farmers' incomes, and create new employment opportunities, we will support high-value crops such as coconut, sandalwood, cocoa, cashew in the coastal areas, agar trees in northeast, and nuts such as almonds, walnuts, and pine nuts in our hilly regions. These, all of them, will be supported. India is the world's largest producer of coconuts. About 30 million people, including nearly 10 million farmers, depend on coconuts for their livelihood. To further enhance competitiveness in coconut production, I propose a coconut promotion scheme to increase production and enhance productivity through various interventions, including replacing and non-productive trees with new saplings or plants or varieties in major coconut growing states. A dedicated program is proposed for Indian cashew and cocoa to make India self-reliant in raw cashew and coconut production and processing, enhance export competitiveness, and transform Indian cashew and Indian cocoa into premium global brands by 2030. Sandalwood. Sandalwood is closely linked to India's social and cultural heritage. Our government will partner with state governments to promote focused cultivation and post-harvest processing to restore the glory of the Indian sandalwood ecosystem, to rejuvenate old, low-yielding orchards, and expand high-density cultivation of walnuts, almonds, and pine nuts. We will support a dedicated program to enhance farmer incomes and in bringing value addition by engaging youth. Bharat Vistar. that is, virtually integrated system to access agricultural resources. I propose to launch Bharat Vistar, a multilingual AI tool that shall integrate the AgriStack portals and the ICAR package on agricultural practices with AI systems. This will enhance farm productivity, enable better decisions for farmers, and reduce risk by providing customized advisory support. She Marts for rural women-led enterprises. Building on the success of Lakpati Didi program, I propose to help women take the next step from credit-linked livelihoods to being owners of enterprises. Self-help entrepreneur, She Marts will be set up as community-owned retail outlets within the cluster-level federations through enhanced and innovative financing instruments. Empowering Divyangjan. Divyangjan Kaushal Yojana. Information technology, AVGC sectors, hospitality and food and beverages sectors often offer task-oriented and process-driven roles which are suitable for Divyangjan. We will ensure dignified livelihood opportunities through industry-relevant and customized training specific to each Divyangjan group. Divyang Sahara Yojana. Timely access to high-quality assistive devices for all eligible Divyangjan is a fundamental need. I propose to 1. Support the Artificial Limbs Manufacturing Corporation of India, Alimco, to set up and to scale up production of assistive devices, invest in R&D and AI integration, strengthen PM Divyasha Kendras, and support setting up of assistive technology marts as modern retail style centers where Divyangjan and senior citizens can see, try and purchase assistive products. Reaffirming our commitment to mental health and trauma care. There are no national institutes for mental health care in North India. We will therefore set up a NIMHANS 2 and also upgrade national mental health institutes in Ranchi and in Tezpur as regional apex institutions. Emergencies expose families, particularly the poor and vulnerable, to unexpected expenditure. We will strengthen and increase these capacities by 50% in district hospitals by establishing emergency and trauma care centers. Focus on Purvodaya states and northeastern regions. Purvodaya. I propose the development of an integrated East Coast industrial corridor with a well-connected node at Durgapur, creation of 5 tourism destinations in 5 Purvodaya states, and the provision of 4,000 e-buses. Buddhist sites in northeastern region. The northeastern region is a civilizational confluence of Theravada and Mahayana or Vajrayana traditions. I propose to launch a scheme for development of Buddhist circuits in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram, and Tripura. The scheme will cover preservation of temples and monasteries, pilgrimage interpretation centers, connectivity, and pilgrim amenities. 16th Finance Commission. On 17th November 2025, the 16th Finance Commission submitted its report to the President. As mandated under Article 281 of the Constitution, the government is to lay the report along with the explanatory memorandum on the action taken report on the recommendations of the Commission in Parliament. which, Sir, Honourable Speaker, you've allowed me to do at the commencement of this session. The government has accepted the recommendation of the Commission to retain the vertical share of devolution at 41%. As recommended by the Commission, I have provided 1.4 lakh crores of rupees to the states for the year 2026-2027 as Finance Commission grants. These include rural and urban local body and disaster management grants. Fiscal consolidation. Government has been delivering on our fiscal commitments consistently without compromising on social needs. To strive towards accepted standards of fiscal management in Budget 25-26, I had indicated that the central government would target reaching a debt to GDP ratio of 50 plus or minus 1% by 2030-31. In line with this, the debt to GDP ratio is estimated to be 55.6% of GDP in BE 26-27, compared to 56.1% of GDP in RE 25-26. A declining debt to GDP ratio will gradually free up resources for priority sector lending and expenditure by reducing the outgo on interest payments. One of the main operational instruments for debt targeting is the fiscal deficit. I am happy to inform this august House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. The revised estimates of the non-debt receipts are 34 lakh crore rupees, of which the centre's net tax receipts are 26.7 lakh crore. The revised estimate of the total expenditure is 49.6 lakh crore rupees, of which the capital expenditure is about 11 lakh crores. Budget estimates 2026 to 2027. Coming to 26-27, the non-debt receipts and the total expenditure are estimated as 36.5 lakh crore and 53.5 lakh crore respectively. The centre's net tax receipts are estimated at 28.7 lakh crore rupees. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.7 lakh crore rupees. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 17.2 lakh crore rupees. I'll now move to Part B. Part B, direct taxes. Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly, giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of either 1% or 2% only. I propose a scheme for small taxpayers, wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns. Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary accounting number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty, and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated, and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing audit report, and default in furnishing statement for financial transactions are proposed to be converted into fee. I propose to rationalize prosecution framework under Income Tax Act while maintaining a careful balance for deterrence in some serious offence. Non-production of books of account and documents and requirement of TDS payment where payment is made in kind are being decriminalized. Further, minor offences will attract fine only. The remaining prosecutions will be graded commensurate with the quantum of offence. They will entail only simple imprisonment with maximum imprisonment reduced to 2 years and power to courts to convert even those into fines. There is no penalty. There is no penalty presently for non-disclosure of non-immovable foreign assets with aggregate value less than 20 lakh rupees. I propose to also provide them with immunity from prosecution with retrospective effect from 1/10/2024. Cooperatives. Deduction is already allowed to a primary cooperative society engaged in supplying milk, oilseeds, fruits or vegetables raised or grown by its members. I propose to extend this deduction to also include supply of cattle feed and cotton seed produced by its members. I propose to allow inter-cooperative society dividend income as deduction under the new tax regime to the extent it is further distributed to its members. I further propose to allow exemption for a period of 3 years to dividend income received by a notified national cooperative federation on their investments made in companies up to 31/1/2026. This exemption would be allowed only for dividends further distributed to its member cooperatives. Supporting IT sector as India's growth engine. India is a global leader in software development services, IT-enabled services, knowledge process outsourcing services, and contract R&D services relating to software development. These businesses and their segments are quite interconnected with each other. All these services are proposed to be clubbed under a single category of information technology services with a common safe harbor margin of 15.5% applicable to all. The threshold for availing safe harbor for IT services is being enhanced substantially from 300 crore rupees to 2,000 crore rupees. Safe harbor for IT services shall be approved by an automated rule-driven process without any need for tax officer to examine and accept the application. Once applied by an IT services company, the same safe harbor can be continued for a period of 5 years at a stretch at its choice. For IT services companies who want to conclude advanced pricing agreement, APA, I propose to fast-track unilateral APA process for IT services and endeavor to conclude it within a period of 2 years. The period of 2 years can be extended by a further period of 6 months on taxpayers' request. I propose to extend the facility of modified returns available to the entity entering APA to its associated entities also. Attracting global business and investment. Recognizing the need to enable critical infrastructure and boost investment in data centers, I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I also propose to provide a safe harbor of 15% on cost in case the company providing data center services from India is a related entity. To harness the efficiency of just-in-time logistics for electronic manufacturing, I propose to provide safe harbor to non-residents for component warehousing in a bonded warehouse at a profit margin of 2% of the invoice value. The resultant tax of about 0.7% will be much lower than in competing jurisdictions. To provide fillip to toll manufacturing in India, I propose to provide exemption from income tax for 5 years to any non-resident who provides capital goods, equipment, or tooling to any toll manufacturer in a bonded zone. To encourage vast pool of global talent to work in India for a longer period of time, I propose to provide exemption to global, non-India sourced income of a non-resident expert for a stay period of 5 years under notified schemes. I propose to provide exemption from minimum alternate tax, the MAT, to all non-residents who pay tax on presumptive basis. Tax administration. I propose to constitute a joint committee of Ministry of Corporate Affairs and Central Board of Direct Taxes for incorporating the requirements of income computation and disclosure standards, the ICDS, in the Indian Accounting Standards Ind AS itself. Separate accounting requirement based on ICDS will be done away with from the tax year 27-28. To support Prime Minister Modi's vision of homegrown accounting and advisory firms to become global leaders, I propose to rationalize the definition of accountant for the purposes of safe harbor rules. Other tax proposals. Change in taxation of buyback was brought in to address the improper use of buyback route by promoters. In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. TCS rate for sellers of specific goods, namely alcoholic liquor, scrap, and minerals, will be rationalized to 2%, and that on tendu leaves will be reduced from 5% to 2%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is proposed to be made final tax, so there will be no further credit accumulation from 1st April 2026. In line with this change, the rate of final tax is being reduced to 14% from the current MAT rate of 15%. The brought forward MAT credit of taxpayers accumulated till 30th March 2026 will continue to be available to them for set-off as above. Indirect taxes. I shall now take up proposals related to indirect taxes. My proposals for customs and central excise aim to further simplify the tariff structure, support domestic manufacturing, promote export competitiveness, and correct inversion in duty. To continue weeding out long continuing customs duty exemptions, I propose to remove certain exemptions on items which are being manufactured in India or where the imports are negligible. Similarly, to further simplify the process of ascertaining the rate of duty applicable on a particular item, I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather, and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover. I also propose to allow duty-free imports of specified inputs, which is currently available for exports of leather or synthetic footwear, to exports of shoe uppers as well. I propose to extend the time period for export of final product from the existing 6 months to 1 year for exporters of leather or textile garments, leather or synthetic footwear, and other leather products. Energy transition and security. I propose to extend the basic customs duty exemption given to capital goods used for manufacturing lithium-ion cells for batteries to those used for manufacturing lithium-ion cells for battery energy storage systems also. I propose to exempt basic customs duty on import of sodium antimonate for use in manufacture of solar glass. Nuclear power. I propose to extend the existing basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035 and expand it for all nuclear plants irrespective of their capacity. Critical minerals. It is proposed to provide basic customs duty exemption to the import of capital goods required for the processing of critical minerals in India. Biogas blended CNG. I propose to exclude the entire value of biogas while calculating the central excise duty payable on biogas blended CNG. Civil and defense aviation. I propose to exempt basic customs duty on components and parts required for the manufacture of civilian training and other aircrafts. It is proposed to exempt basic customs duty on raw materials imported for the manufacture of parts of aircraft to be used in maintenance, repair, or overall requirements by units in the defense sector. Electronics. To deepen value addition in the consumer electronics sector, I propose to exempt basic customs duty on specified parts used in the manufacture of microwave ovens. Special economic zone. To address the concerns arising about utilization of capacity by manufacturing units in the special economic zones due to global trade disruptions, I propose as a special one-time measure to facilitate sales by eligible manufacturing units in SEZs to the domestic tariff area at concessional rates of duty. The quantity of such sales will be limited to a prescribed proportion of their exports. Necessary regulatory changes will be undertaken to operationalize the measures while ensuring level playing field for the units working in the DTA. Ease of living. To rationalize the customs duty structure for goods imported for personal use, I propose to reduce the tariff rate on all dutiable goods imported for personal use from 20% to 10%. To provide relief to patients, particularly those suffering from cancer, I propose to exempt basic customs duty on 17 drugs or medicines. I propose also to add 7 more rare diseases for the purposes of exempting import duties on personal imports of drugs, medicines, and food for special medical purposes used in their treatment. Customs process. India's role and share in the global trade is poised for a major leap in line with our ambition and journey towards Viksit Bharat. In this regard, I propose many measures for custom processes to have minimal intervention for smoother and faster movement of goods and greater certainty to the trade. Trust-based systems. I propose to enhance duty deferral period for Tier 2 and Tier 3 authorized economic operators, known as AEOs, from 15 days to 30 days. I propose to provide eligible manufacturer importers the same duty deferral facility. This should encourage them to get themselves accredited as a full-fledged Tier 3 AEO in due course. To provide greater certainty and for better business planning, I propose to extend validity period of advance ruling binding on customs from the present 3 years to 5 years. In the spirit of the whole of government approach, government agencies will be encouraged to leverage AEO accreditation for preferential treatment in clearing their cargo. Regular importers with trusted long-standing supply chains will be recognized in the risk system so that the need for verification of their cargo every time can be minimized. Export cargo using electronic sealing. Export cargo using electronic sealing will be provided through clearance from the factory premises to the ship. For import of goods not needing any compliance, filing of bill of entry by a trusted importer and arrival of goods will automatically notify customs for completing their clearance formalities. This will enable goods to be released immediately on arrival. The customs warehouse framework will be transformed into a warehouse operator-centric system with a self-declarations, electronic tracking, and risk-based audit. These reforms will move away from the current system of officer-dependent approvals and reduce transaction delays and compliance costs. Ease of doing business. Approvals required for cargo clearance from various government agencies will be seamlessly processed through a single and interconnected digital window by the end of the financial year. Processes involved in clearance of food, drugs, plant and animal and wildlife products, accounting for about 70% of interdicted cargo, will be operationalized on this system by April 2026 itself. For goods not having any compliance requirement, clearance will be done by customs immediately after online registration is completed by the importer, subject to the payment of duty. Customs integrated system will be rolled out in 2 years as a single integrated and scalable platform for all customs processes. Utilization of non-intrusive scanning with advanced imaging and AI technology for risk assessment will be expanded in a phased manner with the objective to scan every container across all the major ports. New export opportunities to support Indian fishermen to fully harness the economic value of marine resources beyond our territorial waters. The following measures will be taken. A. Fish catch by an Indian fishing vessel in exclusive economic zone or on the high seas will be made free of duty. Landing of such fish on foreign port will be treated as export of goods. Safeguards will be put in place to prevent misuse during fish catch, transit or transshipment. To support aspirations of India's small businesses, artisans and startups to access global markets through e-commerce, I am pleased to announce complete removal of the current value cap of 10 lakh rupees per consignment on courier exports. In addition, handling of rejected and returned consignments will be improved with effective use of technology for identifying such consignments. I propose to revise provisions governing baggage clearance during international travel to address genuine concerns of passengers. The revised rules will enhance duty-free allowances in line with the present-day travel realities and provide clarity in temporary carriage of goods brought in or taken out. There are honest taxpayers who are willing to settle disputes by paying all their dues, but they get deterred due to negative connotation associated with penalty. They will now be able to close cases by paying an additional amount in lieu of penalty. Honorable Speaker, sir, with this, I commend the budget to this august House. Jai Hind. One and a half hours.
आइटम नंबर 3 माननीय वित्त मंत्री जी.
Item number 2, sir.
3.
Sir, with your permission, I rise to lay on the table of the following statements under Section 3, 1 of the Fiscal Responsibility and Budget Management Act of 2003. Medium-term fiscal policy, fiscal policy strategy statement, and macroeconomic framework statement.
Item number 4, माननीय वित्त मंत्री जी.
Sir, with your permission, I move for leave to introduce the Finance Bill 2026.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए. जो सदस्य इस पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में, हाँ वालों के पक्ष में अनुमति प्रदान की जाती है. माननीय मंत्री जी, अब विधेयक पूरे स्थापित करें.
Sir, I introduce the bill.
माननीय सदस्यगण, आपको सूचित किया जाता है कि माननीय वित्त मंत्री जी के बजट भाषण की कॉपी पब्लिकेशन काउंटर पर ली जाती है. बजट भाषण और बजट से संबंधित दस्तावेज आपके मोबाइल फोन और मेंबर पोर्टल्स पे ही उपलब्ध है। सभा की कार्रवाई कल सोमवार दिनांक 2 फरवरी 2026 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है।
So as the budget is tabled in Parliament, the House stands adjourned. It's a Sunday, the first time ever that the Union budget has been presented on a Sunday, the 9th consecutive budget by Union Finance Minister Nirmala Sitharaman. Now, many oftentimes they say, read the fine print. The devil lies in the details. In this case, perhaps not the devil, but the delight lies in the details, viewers. The markets are down. The markets are also operating today. As of now, the Sensex is down by about 1,000 points. That's what we are given to understand. Is it because of the gold ETFs and the plunge that gold and silver ETFs have had through the day? Or is there a sentiment which says, what's in it for me? There is, as elucidated in part A and part B, huge steps that have been taken towards spreading and disseminating this growth story into tier 2 and tier 3 markets. There is a huge impetus that's been given to agri-producers, wheat, cashew, coconut, and also pole-bound states. There is a thrust to try and create a corridor, an industrial manufacturing corridor towards the eastern parts of Bharat with Purvodaya. There is a thrust towards easing the tax norms and simplifying tax procedures with the new tax laws that will be tabled in Parliament and perhaps be enacted, come into force within 2 months from now. But are there huge tax rebates? No. Is there a certain concession on import duties and customs duties that have been improved? Is there more effort to try and create and generate more employment in the labor-intensive sectors? Let's ask our experts. We've got Rajiv Kumarji, S.C. Gargji is there, Sunil Alagji and Sumita Davraji with us. Rajivji, your thoughts first up.
Yeah, so very, how do you say, well-designed budget, especially to promote foreign investment.
Okay.
So therefore, the exemptions on NRI taxes, then the ability of the NRI to buy property here, and also the facility for the foreigners to invest in equity here. All of those are meant to attract FDI into the country, which is a very good thing to do. Now here, tax rates not change. Nothing, which is also very good. No point tinkering with them. I would have been happy if there had been some more on this investment, because that's what the budget started off with, and that's where she should have got the revenue. But also, I think commendable that there are no announcements of new schemes again like last year. So
right.
no more.
We're not looking at the market indices here, Rajivji. We're looking at the engagement on social media platforms, on our YouTube platform. And this is the live data. And we thank our viewers for this phenomenal support. 3,61,970, outclassing all competition on social media. Thank you for your viewership. Thank you for your support. And I think it's huge credence to the weight of our panel here. These are the concurrent leads and the concurrent views that we are getting. And overall, 3,61,970 compared to a lot of our competition. At the end of the day, budget, like Suhail said, was a little tongue-in-cheek about it. And he said this is all about ratings and viewership for the channel, but it is also important who's watching us for credible understanding and analysis, and we also were giving you live analysis by our panel. Rajivji, we are completing, yes. Yeah. So you believe it's positive overall?
It's positive. It's it's a sort of regular, if you like, conservative budget, but and as I said, emphasis on investment, on also on no tax increases except for STT, which will probably impact the transaction, the equity market, which is why, maybe one reason why the equity market is down for that reason. Nothing much on promoting exports, except for textiles. I think she announced the integrated package with 5 components and including a mega industrial park, which is very good, which I think will take advantage of the India-EU FTA that's there. And then the focus on agriculture, which is very welcome. Because most budgets don't have that, and this time, the whole focus on the coastal food products that they've got, and also on agri-process. I think that's a
no duty on fishing in economic zones. It's being treated as even the waters are being treated as special economic zones, so there'll be no duty. And if it lands on another port, it will be treated as exports. Somewhere trying to push fisheries, which is happening. There is a segregation and a deep dive focus, but like they say, the delight lies in the details. This high-speed rail corridor. So try and pushing on integrating the entire infrastructure bed and improving connectivity. Another 12.2 lakh crores that have been now committed towards capital and expenditure. Will that largely be towards infrastructure, or is it going to be directed towards other?
The public capex all very well, 12.2 lakh crore and increase 9% increase. But I would have liked actually a bit more on how to improve private capex. Domestic private capex. I've been talking about the FDI and there's incentives given to them.
Right.
But I didn't see much on incentivizing domestic investment, into either into manufacturing or into exports.
Right.
Maybe I missed it, but it would have been better if there were some incentives for private investors.
Let's try and understand the sector-wise investments. One, capex has been raised to 12.2 lakh crore. We've got that on camera. The next one, let's just quickly look at some of the key takeaways. Introduction of a new income tax act that will come into force. Will they permanently be moving to a new tax regime? Simplification of the tax codes, etc. 10,000 crore biopharma Shakti scheme. These private healthcare advisors and workers. So is that again adding to the labor force and alternative employment? Aim to lower fiscal deficit to about 4.2%. This time around, she says that she's stuck to the brief, keeping of the fiscal deficit targets. Budget estimates and also the revised estimates, and also more importantly boost for labor intensive sectors. The labor expert is sitting right next to me, so let's go to her, and then Garg Saab, I'll come to you, and then Sunil Alagji. Yes ma'am, you've been taking copious notes right through the last 90 minutes. Yeah, so please tell us.
No, I'm just trying to understand the landscape of the budget. It covers a lot of sectors. What I feel most happy about is that on infrastructure, the allocation is the highest ever, and there was some debate about that before the budget, whether that will be maintained. So that is a growth driver, and that's a growth driver in many ways for the labor force that works in construction, also for the labor force that works in factories which produce components, steel, cement, so on and so forth, for the logistics sector also, which will be carrying all these goods to infrastructure points, and for the capital goods manufacturing, this will be very attractive. At the same time, the 7 high-speed rail corridors between the cities, that will be a growth connector. It will help the mobility of labor and also help them to reach the places where the jobs are, where the employment is. The waterways brings in a lot of multimodality. Climate-friendly multimodality into the logistics framework. So this is something to really feel happy about, and also the focus on services. What the Honorable FM has announced, a high-level education to employment for services.
Correct. We talked about education, improving and focusing on education. So 5 university townships have been focused on. We looked at tourism, and then they're saying that we're going to improve also cultural tourism and also medical tourism. There's going to be huge impetus on these two because they're also labor intensive. They also generate a lot of jobs.
The local ecosystem gains from that.
They generate a lot of jobs. Mr. Garg, Shivani is also joining us from the CII dugout. A quick word from there, and then we'll come back, bring it back into the studio. Yes, Shivani.
Yes, so certainly, Anand, as far as the industry is concerned, there are mixed reactions and very first few reactions that are coming in right now. We're going to, of course, get you some of the top industry voices and reactions here, but there's a lot for many, many industries. So we will be joined by many of those representatives here at the CII dugout. Our guests are going to start arriving very, very soon. But initially speaking, there's a huge murmur going around as far as the corridors here is concerned. And the focus that the finance minister has announced, which is, as you were saying, in tourism, there's education, there's the future sunrise sectors as well. There's of course pharma industry. We're expecting a reaction from that industry as well. And we'll be right back with you as soon as our guests start arriving here. Anand.
Right. So let's swing back to you and come back to you into the dugout as soon as we have experts there. Garg Sahab and then Sunil Lalakji.
See, I think great budget in this in the way this has been presented. For the first time, I found the budget focusing on what the budget should be doing rather than sort of announcing the announcements of the government and all.
Right.
So this is one great aspect.
Right.
Second, to my mind, a very nice macroeconomic budgetary balance. The FM has not increased the expenditures very much. It's
Right.
only about 6%. She has not taken any tax hits kind of thing.
Right.
The fiscal deficit at 4.3% for the next year is good.
Right.
So I think the budget balance is excellent in the circumstances. Third, to my mind, there is very specificity of everything which has been announced this time.
Okay.
So proposals across the
there's some attention to detail. That's what, and sector-wise.
Exactly,
Yeah,
and
sector-wise.
that is very, very good. Everything was a very specific proposal, whether it was for the electronics industries or whether it was for services boost kind of thing. So that's, I think, the big, very good things about. Three bad things, which I think is very
they could
big,
have done or did not do.
which to my mind are very big misses.
Yeah.
One is this, again, this privatization and disinvestment has been completely forgotten.
Yeah.
Second, the customs package was expected. There is no customs package. You don't find it there at all.
Correct.
There is again some tinkering which has been done in the past. And lastly, to my mind, the one big problem which India, especially Delhi, has been facing is this climate change and pollution has been completely missed out.
So pollution has not been addressed in the budget, but is it because it's going to be addressed not at a central level but at the local, state and administrative level?
We must recognize that this is a national problem. It's not local problem. Anywhere else in the world, whether it was China after 2010, this has been handled and dealt with at the central level.
But we must not forget, I agree and I buy this point with all respect, but Beijing 2008 has everybody forgotten. Did we see the athletes wear masks and choke?
Correct. So that is...
And then till 2016, Beijing could not solve it. Beijing also took 8 years to get rid of the
Exactly, it takes time, but you have to start.
Yeah.
You have to start.
On that, the numbers actually say that Delhi in the last decade and a half has not had clean air days as many as it has had in 2025.
No, latest is wind effect. How do we deal with the pollutants?
Correct. Now,
Did we do anything to deal with the pollutants?
Okay. You believe strongly it should be part of the budget and there has to be a national focus on it. There is another thought which says this is an administrative challenge that the Delhi government has and the Delhi government has to deal with it along with the respective neighboring state governments. So that's the thought process. There will be no overall central budgetary allocation for it. It's something which everybody has to put some work in it and collectively sit together.
Where's the cooperative federalism, Anand? That's what has to come in, and that begins with the budget. I'm sorry.
So, ye aap batayenge. I mean, AAP. Sorry. You're going to ask me, no, because I said basically a budget to increase our effort on growth. Basically, it's a budget. Therefore, I like that portion. But it's focused on employment without actually talking about employment. Now, for instance, tourism. And if you talk about infrastructure, you talk about every other thing is going to generate employment.
Right.
Now, employment is 1.4 billion people the Prime Minister has to look after. Because he stands for elections every year.
Correct.
He stands only for employment. And inflation. Now, ultimately, people vote for inflation or employment.
This year in the next 3 months, 4 months itself, there will be West Bengal, there is Assam, there is Kerala and there is Puducherry. And towards the end of the year, we will look at, again, Tamil Nadu, then we will go to
So he's not talked
Punjab,
about
next
employment
year,
at
year.
the moment, but he's all through her speech was on infrastructure and consumer spending and everything else that generates employment. Now, whether you want to make a political issue out of it or not, because when the Hindi channel of yours in the morning, when the opposition wanted everything, but when it came down, when I asked them about one question which they had to answer, was will they go into one government and one policy? And they couldn't answer this question. And they could not answer this question at all. Because everybody wants everything for themselves.
Right. Santosh Mehrotra ji with us. I'm going to check if Mohandas Pai ji is through with us. Mohandas ji, namaste. Can you hear me? Okay, we'll try and go across to him the moment he is through. Mohandas Pai is also joining us.
Quick. What I feel is that the private sector and we must join hands with the government. Every time the private sector has come in and they've increased through AI or whatever you want to increase productivity, they've sacked people. The private sector has actually dismissed people. So it's a question of them increasing employment and joining and perhaps in reducing their profits.
What is labor intensive, where AI can be an enabler? Now, globally also we are seeing AI getting into the warehouses and huge numbers of jobs being retrenched even by the likes of Amazon, etc. Yeah. And this will happen. But there will also be perhaps a counter opportunity where opportunity will be created, especially in places like Bharat.
The skill development like Bharat that is going to take place might take 2 to 3 years. Now, he is standing for elections every year and therefore he has to generate increased employment. Now, when I said reduce profits for